Oh, Good morning to all of you, those here in the room and those attending virtually, as well as observers watching this meeting online. Welcome to the last day of this 5 days meeting, September meeting. Hope that we will be able to make as much progress as we did over the last 4 days. Yeah, and hope that before heading home, you will still have energy and focus to address the topics on tax planning that we will be analyzing today. Last June, the task force kindly provided us with a high-level summary of the responses received to the public consultation, to the exposure draft. In between, since June until now, the task force met, analyzed these responses, and responded to these comments received. And what we are going to address today is the result of the work done by the task force by somehow integrating and responding to these comments in the previous proposals that had been drafted. I'd like to remind this board that we are planning and heading for finalization and approval of this project in November, and so this phase is critical to allow for that achievement in December. We outside that today we should reach a place and a situation which is as close as the final proposals as possible, so as to allow to a smooth and effective approval in December. So with this, I think that I'm going to give the floor to Jens, not before thanking the task force and the staff for the amazing work done, not only over the last 2 years, I would say, but over the summer, which also for this task force and for the staff supporting the task force was a very hot summer and not exactly a quiet one. So Jens, thank you very much in advance, and the floor is yours.
Thank you, Gabriela. And I think it was not only the summer which was hot, but also the topic still is very hot. And we received also during that time comments from stakeholders, even though the comment period has been finalized, but it is a topic where many people are reacting, and also in advance of this meeting received from the other or one or the other to whom we had outreach activities in the past. They read the papers and gave us input or food for thought, and I will try to integrate those questions or issues which seems to be of relevance for the whole board to discuss at certain stages during our presentation. Carl and I will share the presentation, and I will start with, on the next slide, you have the clicker? Yes, okay. Perhaps an update. I will give you a brief update on our activities. Gabriela, you mentioned we had an in-person task force meeting in summer and 2 virtual meetings. We had some outreach activities, continuing outreach activities on that issue. And the last one was last week, where we had, together with IFAC, ACCA, and CAANZ, a virtual webinar with more than 500 people on trust and tax, so that, or trust in tax stakeholders and participants. I think you see by that it's a very, very important and interesting topic. We had our CAC meeting at the beginning of last week, and I think we had received very, very huge support, and we had also some questions about recent events in the profession, where the connectivity between tax planning and the overall ethical behavior was mentioned. So I think that was less comments on the content of our proposal, more about the policy framework and the encouragement to finalize the project. We received some further feedback on certain issue, credible basis, more guidance material on that. And the big question, documentation, whether mandatory or encouragement. So these topics which are obvious, we will also discuss today. And we have also read and carefully studied the PIOB issues in the updated paper, where the issue of promoting transparency and good governance is an issue which was added to the other point. I see the documentation requirements. So all this we will cover today. And with this, I would like to give the floor to Ala.
Thank you, Jens. So a quick recap, and I don't expect a lot of answers questions at this stage. It is about the approval of the ED at the December 2022 meeting. We issued it in February for market consultation. We received 49 responses, including one from the Tax Committee of the International Bar Association. The Appendix 1 of Agenda Item 9A will contain the list of stakeholders that provided those responses. And you'll see most of them came from professional accounting organizations, which is a no-brainer as they represent the professionals who will be adopting the provisions when it is approved, and hopefully with the ambition in the future would also be applicable for non-PAs who will in the future look to adopt the same framework as well. Sorry, just try to move the slides. There you go. The ED had 13 questions, and yeah, you heard right, it is 13. And today we would like to address the significant feedback we received on these 10 topics in front of you. And so Jans and I hope that you have enough energy and attention to walk this journey with us as we take you through the significant comments. We also have provided supplementary information of the 13 questions that we proposed in the ED, and they are in agenda items 9D1 to D13, and agenda item 9D14 contain editorial comments that we also considered as we were looking through the drafting. So first of all, as this project is about tax planning, we will start with a description of tax planning. Overall, we received broadly supportive support from respondents, the principles that the task force proposed in the ED with further recommendations. So first of all, while the stakeholders were of the view that the description is too broad and goes beyond the issue of aggressive tax minimization, others have described that the examples provided are too narrow in scope. So you can appreciate there is polarizing views of the description of tax planning, and it is not surprisingly as the vastness of the tax planning services that's provided in the market is being acknowledged. Regardless, this project is about addressing tax planning, so it is crucial that we have a description of tax planning to convey the range or scope of tax planning services, as we have gone beyond just focusing on the issues of aggressive tax planning strategies. So we'd like to clarify that we're not addressing aggressive tax planning strategies. We are looking at tax planning in general, and the uncertainties and the threats that might arise when you operate in times of uncertainty. So the task force acknowledged that developing ethical provisions for PAs may be challenging without a clear definition or description, which is why the ED proposed practical guidance to assist PAs in making appropriate judgment and decisions in navigating the gray zone in the ED. The task force also notes that tax planning is a legitimate activity that a client or employing organization may undertake to structure or organize its tax affair in a tax efficient manner. So the task force is of the view that tax efficiency, tax efficient is appropriate term to describe tax planning. It speaks to the general purpose of the tax planning activity without being overly prescriptive or focused on a desired outcome, which is whether it to achieve tax optimization or to minimize tax liabilities. As a result, the task force is proposing further revision to paragraph 385A1 to clarify that tax planning services could consist broad range of advisory services, and also to add the word planning in the description of tax planning to address some of the concerns that we've heard regarding description of tax planning services. And regarding the example of transfer pricing arrangement, there was a concern that the task force might have inadvertently suggested that PAs design transfer pricing arrangements without regard to prevailing transfer pricing standards or guidelines. Hence, the task force is proposing to clarify this in the example in paragraph 385A2. At this point, the task force would also like to point out that the reference to transfer pricing is to refer to the role of the PA in recommending or advising the arrangement, and not so much to implement and ensuring that it is in compliance with relevant laws and regulations. At this point, I would stop to seek if the board members agree with the task force views and agree with the proposed revision to description of tax planning and the example of transfer pricing.
Conrad, I just wondered if, just for purposes of facilitating the board discussion, if you could just flip to the previous slide where we have the text. Yes, thank you.
Right, thank you very much, Jens and Carla. Christelle, please.
So I support the changes. I think having a description that is the most neutral possible and fact-based is very key, because it's during the rest of the journey that you have to deal with the strengths and the objectives.
Thank you. Sunam.
Thank you. I have two questions or clarification. I'd like to hear from you. One is in terms of the language, advisory, tax advisory, tax planning. I believe after the change, we have used two different words for the same purpose, for one purpose. On the other hand, I believe we need to take a look at the paragraph section 604, paragraph 2A1. Here, in terms of tax services, our code does listed tax advisory services, planning services separately, and described separately in connection with non-audit services. If we use these two different terms or phrase at the same time for one purpose, there could be confusion from the two different parts. That's one of my comments. The other comment is my question. I'm struggling how to understand, because I believe this whole section 380 is designed or written from the perspective of PAs who provides advisory service or comments or recommendation. On the other hand, there could be instances where PAs are involved for the preparation or direct involvement in the preparation of tax planning arrangement. So in the cases, I'm wondering how we apply this section to those PAs. Thank you.
Jens, do you prefer to respond or to take some questions and
Perhaps we
respond?
take first some question and then we collectively will respond.
Okay, thank you. So Hector.
Thank you. I support the approach entirely. I had two questions of, I'm not sure they are included in the examples and seem to me like obvious or things that people will be looking at in examples. And you're talking about the use of losses, maybe tax credits as well is might be relevant in maybe in the same sentence, efficient use of credits and losses. And I was wondering if you see M&A activity in one of those examples. Yes, because that's another obvious example, and it's totally legitimate in terms of how you do the acquisition. You want to be efficient.
Thank you. Okay, yeah, so I'm also generally supportive of the approach, but as I was trying to get ready for the meeting, I was trying to look at the intersection between tax planning and ESG, and so I came across a few interesting things. You may want to take them into consideration. First of all, developing a tax transparency and governance framework. I think that's very important in terms of tax planning, given that it is an ethics code, and we are supporting sustainability and transparency and governance. That's one. Among the examples, so my suggestion would be to put that in section 380.5A1, perhaps, if you find it appropriate to include it in the definition, because I think we should be promoting tax transparency and governance frameworks. That's number one. In terms of examples, you may want to include something along the lines, what Hector said, business investing in renewable energy, infrastructure, or adopting sustainable manufacturing practices for tax credits, for eligibility for tax credits, and compliance with environmental tax regulations. Just a few examples I came across, but I thought you may want to.
Thank you, Rania. One more, or it's better to stop here.
Perhaps we stop here. And
Okay.
then, okay. Otherwise, we will lose something. Okay. First of all, thank you, Crystal, for the support. Sungnam, I think, yes, we will consider your remark on 604 2A1 and the consistency in terminology. That's a very good point. The situation you described, I think both situations are covered by the text, because either the PA in public practice is involved in designing, creating, and we have specific situations later in the related services sector where perhaps we can make a difference between a PA who is part of the overall tax planning, implementation, creation, or if he or she is only in the compliance part after someone else has done the work. And I think this is a very important differentiation. The code is relevant for all, but perhaps there's a differentiation whether you are part of the team, so you are in the middle of the application of that part, or whether you are in some related services. And there I will come back on the next slides to make this clear. And we are trying to make this differentiation clear. But thank you for raising that issue. Hector, the losses and tax credits, we will consider this as a task force. And M&A activities, perhaps we can also think about, but for me, we want to give examples where it's more about the role of making an arrangement, whether by an M&A transaction or in restructuring. So everything should be covered, and these are only examples. The issue, Rania, of including ESG is a hot topic, yes. The challenge we see that there is a developing issue, because only one framework at this stage, GRI 207, is covering this under the sustainability heading. If you're looking to the other frameworks, they are not yet there. So we are a little bit in the situation. I would like to discuss it also on board level and see your views, whether we should, on a high level, give some reference or be a little bit more reluctant to go ahead, because I think we think that it's included if the framework is covering it. The question, and that's the PIOB question or encouragement, I would say, is to think about, and that would be an issue we would like to raise here, in which respect we are saying that the professional or the PA should support or foster or push a little bit in that direction. So that is a policy question, and it's very much depending on the environment where the PA is acting. So that and the possible solution could be to make the PA aware of such a development and be a little bit neutral about the range or the deepness or the consequences. So to make a reference without saying that is a must, because under certain frameworks, there is no mentioning yet, I would say, of tax as part of ESG. But from the beginning of our project, we see this project as a step towards a more sustainable taxation, and so sustainability in a broader sense.
So my suggestion basically is twofold. One, I think in today's world, and if we want the standard to be, up to par with the current challenges, and to show that, we are, as we are developing with every project, we are, very up to date and current and trying to address current issues. I think it is imperative that we push for tax transparency, at least. If we don't want to include the ESG, I understand, you are right, very true. This was another issue I wanted to raise. I think that if we want to really, whatever we issue to be current, we have to recognize ESG in each and every project. I don't think, even if we just signal very indirectly that ESG is somehow entailed in here, or in part of this, even if we don't want to push for it very explicitly, but just to signal that ESG is here. If you are, I think that's very important, because we cannot deal, in my opinion, as a board, with ESG as just one project, and now we're done with ESG. ESG is the new, status quo. It's a new reality, and we have to show that we recognize it in each of our projects. Thank you.
Ronnie, if I may, in response to that, I'm very much in agreement with what you're saying about the ESG movement going forwards. The reference to transparency, it's explicit throughout the text, where we encourage PAs to make the disclosure where appropriate we'll come to that part later on. Whilst the code, we don't normally make a particular reference to a corporate governance framework or transparency framework. We try and bring those within the text itself in terms of examples of behavior we encourage PA to adopt or undertake. So in terms of making it clear in the description, I haven't discussed it with the task force, but I'm of the view that the description is talking about the tax planning service as the scope of the services, and where we want to enhance the transparency factor. Like, we can look at the rest of the text, not too sure about putting it in the description in itself, because we do not want to detract our users of the code from understanding that we're talking about tax planning at the moment and the scope, and then we will give further guidance in terms of how then you can enhance transparency of the services you're undertaking in a later text. And also the examples that we've given there is not an exhaustive list. We're trying to keep it as generic as possible, as understood by those who provide tax planning services in the market now. These are some of the examples that we commonly hear. You'll be able to relate. if we want to bring in examples that relate directly to ESG, perhaps we need to discuss if we want to be as granular in detail and descriptive, which is what we're trying to avoid sometimes. So we'll definitely take this back. We'll strike a balance. But that's my initial thoughts, not the task force.
Can I jump, if I
Yeah, of
may,
course,
Gabriel,
yeah.
if I can just jump in here. Could I remind the board that this is the stage at which we are at in this project is post-exposure. We are not redebating the proposals for purposes of exposure. So I would caution the board to be very careful about adding new material that's not been exposed, including examples. This is not the time to be adding new material, because the danger is that we're putting material that's not been exposed, and we are not aware of any potential unintended consequences, because even for examples, because they've not been exposed and we've not received any stakeholder feedback. The purpose of this session is really to hear from the task force as to how the task force has analyzed the feedback from exposure and what the task force is proposing in terms of responses. And the board is then asked to weigh in on the task force's views. This is not the time to be developing new proposals for the document. That's number one. Number two, on Arania's comment about putting the focus more on ESG. Equally here, I would caution the board about being clear as to the board's remit. We are not trying to set reporting standards. This is a reporting issue. If the board feels that there is a case for reflecting on how the code can make or let's say influence evolution of sustainability practices, perhaps that is a matter for consideration as part of the other strategic issue, which deals with considering the enlargement of the code to deal with reporting issues and exploring how the code can influence those practices around transparency. But if this is not, we're not dealing with a reporting issue here, and if there is a case to be made for transparency, we should have a conversation with IFRAG or IESBA or some of the other reporting standard setters.
Oh, sorry. Thank you, Ken. Luigi, please.
And thank you, the task force, for the effort they did. I am fine with the examples here. I think they provide a clear description of what IESBA would like to achieve here. Before hearing from your explanation, I had some issues with transfer pricing arrangements, because it seemed to me that it was not so clear, the distinction between tax compliance and tax planning. And after your clarification now, it is clear to me. And this lead me to conclude that it's a question whether there are room to say, finalize better this description in order to make it clear that everyone understands that we are speaking about tax planning and not tax compliance, which is a different thing. Maybe it's my problem, sorry. Let's say. And I think this is something you may consider.
Thank you, Luigi. Vanya, please.
I'm quite supportive of the project itself, and I think you did a very big job in a topic that is very complex. I just have a suggestion in the third bullet, because it is advising on an entity on instructing international operations in order to minimize its overall taxes. I don't think that minimize is a good word for us to use in connection to the taxes. Some government will think that we want to reduce tax. I would say to avoid tax overlap among countries, but minimize tax. I think that some government will think very bad about that. Yeah.
But it's the reality.
It is.
It is, but I would not use it.
But
here. Yes.
And maybe I will find the board again about what I said
Yeah.
earlier. this has gone out on exposure, and Nestor Task Force has sort of very significant concerns about the wording of this bullet. I would really advise the board to be careful about going back on material that's already been exposed and rewording the proposals.
We had, with the term avoidance, we had a long-lasting
Yeah.
discussion
Yes,
in exactly that direction.
Yeah,
So I would say minimizing was at the end, I would say, a
Minimum.
compromise with most of the stakeholders could live.
yeah.
I think that is
Just
sometimes,
suggestion.
yeah,
Jens, I think that
No, no. just to
maybe we
explain.
have
So we had to long-lasting discussions
Yeah.
with stakeholders during the round tables on the terms.
Okay, thank you very much, Vanya and Jens. Christelle, please.
Yes, just to say that in our next intervention with Laura on work stream 2, we have to embark the tax text, because in terms of when we are going for exposure draft, it will be there. So we are going to work on that in October, and of course, given the very sensitivity and technicality there is there, we will ask for Jens sort of sounding board for our work on what may be added or changed. Yes.
Okay, thank you, Christelle. Felicia.
Thank you, Chair, and thanks, yes, for the good work. I also had a bit of a concern, like Vanya's, on the use of minimize. And I just did a little bit of a Google search just to see whether optimize could work. And I was thinking maybe if you could think of using optimize instead of minimize. I don't know if that makes sense, but when I did a Google search, I think it was more or less in that direction that you could use optimize instead of minimize. Just because minimize sounds a little bit scary for anybody who's looking at this. You think you're trying to minimize everything, but if you maybe use more optimize, it could make a bit of more logic. Just to propose. Thank you.
Thank you, Felicia. Please.
Yeah, this might be a somewhat wordsmithing point, but 5A1 there now says we're defining it as tax planning as advisory services, and in 9A it indicates that therefore the intent is that compliance services are not considered tax planning, but that never makes it into the code. And I don't know if there's a place to deal with that, or whether basis for conclusion could make that clear, but that's just an observation. Okay.
Thank you, Jens. Can we take one more?
Yeah.
Thank you. Rad.
Thank you. So just 2 points. One, on the issue of transparency, I mean, fully aware of and recognizing all the issues that Ken raised, but I really feel very strongly about putting in the word transparent in there, because this is a code of ethics. And I mean, I think it is very important to show that, you know, ethically speaking, the accountant or whoever is providing the service, it's not enough just to help their in the public interest. If you want to think in the public interest, they should help the client plan their taxes and their tax strategy, of course, in a tax efficient manner, but the one that is transparent. I think this is a code of ethics. We have a duty to encourage the tax preparer, the service provider, to push for transparency. And I mean, this is very important, and in my opinion, as especially in everything that we are preaching in the code of ethics, I think that's key as a word. And that just, of course, I leave all the other technical issues to you and whether it's okay to introduce it at this point, but that's how I feel. Number one. Number two, concerning minimizing and optimizing, I also would recommend that you move to optimization, because minimization, it carries the connotation that we are focused on the short run, whereas in tax planning, I mean, the horizon should be, I mean, you might be investing today, for example, in, for instance, in renewable energy, or making, I mean, it's or maybe you're paying more taxes today or whatever, but then over the long run, you are minimizing your taxes or your costs or whatever. So I would also push for optimization as a word, just as much. Thank you.
Okay.
Gabriela, just to just to remind the board again, we're not redebating what has gone out on exposure. Number one, and number two, we have a scope for this project, and it doesn't include consideration of sustainability reporting. So if the board wishes to go back, the board can consider reopening the project to revise the scope and essentially to go out on re-exposure. But I would caution the board that this is really the final stretch for this project, and we have to be extremely careful about bringing new issues for debate at this point in time.
I think you can, China, I think that you want to speak, if
Yeah.
you weren't able to raise your.
I'm pretty much with Ken. This has gone out for exposure. A lot of global tax experts have looked at this, and we are just addressing the comments. We can't be, because there'll be unintended consequences unless the board decides to put it out again.
May I also come back? I think we have to think about the history of the project. The history is not optimization, it's minimization, it's Panama Papers, it's other issues. So that is the starting point. If we are very close to say greenwashing the reality to optimization where minimization is in focus, I think we are diluting the scope of the project. Optimization is a nice term, and I understand that it's the best practice to optimize taxes, but here we want to also address practices in reality. And I've never heard, sorry, that someone's saying, I want to pay higher taxes. So the reality is that it's and we had a lot of discussions with psychologists and people, there is an intrinsic motivation to minimize tax. That's natural somehow. So we have to see the reality. I understand the point from a language point of view, but sometimes I think we should speak plain English, so to say, if we are giving examples. And that's why I would, beside the reasons you mentioned, Ken, also to accept this, we started with avoidance and such type terms, which were too negative, because in each and every framework, it's said to minimize tax in the scope of the law is fine. And there are gray zones, and we are talking about the gray zones and not the options which a tax system is giving. And we have to be also jurisdiction neutral, which is very important in the tax arena. What is acceptable in one jurisdiction is not accepted in another one, and the other way around. So that's why we are trying to be a little bit more basic here to respond to the reality we have found during our exercise. And Luigi, thank you. We will look at that, if I may respond to some of the feedback. And also, Rich, we will see whether it's something for the basis of conclusion. But perhaps we have the opportunity to also, with the next topic, related services, to make clear in which role you are. Are you more in the compliance role at the end of the value chain, so to say, or are you in the creative phase? And I think there are two different levels of obligations you have to fulfill. So the one is probably only follow the code, the fundamental principle and the conceptual framework if you are in the compliance part. But if you are creating something, you are in the middle of that paragraph section.
Thank you, Jens, and thank you. Oh, sorry, I was not seeing two badges. He's still, Galen.
May I weigh in? I don't think that the CAG would be supportive at all of reopening this to pick up the other concerns that may be very legitimate, but at this stage in the project. I'm just sort of wondering though, this word minimization, is there an emphasis on the amount of tax? Say minimization, is that what we're talking? I don't think that, it seemed to me that the nuance should be maximization of behavior, the ethical behavior. We should be focused on the behavior and not the amount of tax. Or necessarily efficiency. That's taken too far. I don't think.
Just an example of it. We just want to give examples where tax planning is happening. And I have not a statistic on global level, but I think most of the tax planning arrangements have the purpose, the objective to minimize. And that's a reality we just described. We're not saying that's aggressive, that's ethical or unethical. We're just describing examples where tax planning services are occurring. It's a reality test, so to say, and it's not yet something where we want to guide or to just, we're describing services which the market is offering. So that's why we thought that this is one of the typical environments where you find tax planning arrangements, and whether it's aggressive or ethical or whether it's a credible basis, that's a different topic in the next sections or paragraphs.
Thank you.
Yeah, in support of that, I think you could explain what you just said in the basis for conclusion.
Yeah.
It is the business reason for what the company is undertaking is to minimize taxes. That's not illegitimate or unethical or illegal or inappropriate. It's a fact, right? So.
Okay, thank you all for the comments. Thank you, Jens and Carla, and let's move forward.
And we are coming to the related services, and I would like to start here to give some reflections on the main comments. There were some comments on one extreme. Some stakeholders said we should have no such a notion as related services. The scope is too broad. And we had others who were saying, yes, we understand there are related services, but it's not clear enough which are the other parties or services you are including. And there may be unintended consequences. And there were also concerns on the monitoring and enforceability side of related services, because it's far away from the services of tax planning. So we discussed this very intensively in our task force, and we are proposing now, in response to that comments, that we would like to change, and I would say that's a significant change, and that's why we should take some time on that we are saying tax planning as defined now, and we want to include related services, but not generally to say tax planning and related services every time, and there is no differentiation between related services and the tax planning activities, but it's tax planning. And more at the end of this section, we would introduce related services or put the related services at the end, and that's a proposal on the next slide. Having a more generic approach to cover all different possibilities. So we acknowledge that perhaps our exposed proposal was not clear enough, and we would say that compliance related services, and I'm coming back to Rich's comment and also to your comment, Luigi, they are under the conceptual framework for sure, so fundamental principles, etc. But having now illustrative examples where the PA is involved, these related services are included by the tax planning section. So that is the overall concept a little bit a change, but it's not a revolution, it's just a clarification, because we used a little bit, I would say negligently, the term tax planning and related services as a suit, and not differentiating the differences we might see between being only the last compliance PA, or being in the process and advisory role. So that's the overall change we would like to propose. So we are starting with, there might be circumstances where a professional accountant is engaged to provide related services to a client that is based on or linked into a tax planning arrangement developed by the client or a third party provider. So now we are saying in such circumstances, the provision of these sections apply to the underlying tax planning arrangement. So that is the first application material. And then we are giving examples. Perhaps I will stop here and listen to your feedback.
Thank you, Jens. Christel, please.
Just for my understanding, that means that if the professional accountant is engaged to provide related service to a tax planning arrangement that he has contributed to develop as a advising service, he's not concerned by that chapter? Because this is what I read.
He is, with the tax planning service, he is involved.
So it goes back into the main service, back into the advisory.
Yes. Yes,
Okay.
he's covered already. He's already covered.
Okay, Sadia.
And so I had a similar question of clarification that Christine had. And I was wondering whether the placement of this paragraph would be helpful to put it a little bit up. Because you come all the way to the end and then related services seems like an other or afterthought, but it's probably a scoping issue that you probably want upfront. Thanks.
Thank you, Luigi.
And thank you, the task force, for this effort that clarifies a number of matters, but also introduce some other matters to consider. When I read this paragraph, it's clear to me what it means if a tax professional perform both activities, so the related services, which could be outside the scope of this document, and the underlying tax planning service. It is not clear to me, though, how it works when someone else did the underlying tax planning engagement and maybe did in a wrong way, or the client decided to implement some tax planning factor service, whatever it is, and it has not credible basis in the law, for example. Does this mean that no PA may assist this client in defending himself, in fixing this matter, in remediating, or does the PA have the opportunity to work at an M&A transaction, and following the examples, at an M&A transaction where there are underlying tax planning services which has no credible basis? So my point is, it works, or at least for me, I may be wrong in reading, but it works if there is the same tax advisory performing both activities. If there are different individuals involved, I think this is something that probably should be clarified, because elsewhere we could reach a wrong interpretation that a taxpayer cannot be defended if he did something wrong in the past. Yeah. I don't know whether it was the law.
I think that is very similar, if I may, that's very similar to some pre-board comments we received. We're saying, okay, we understand this, and it's not the question we are supporting the tax planning arrangement, but if there is an arrangement which has no credible basis and it's challenged in front of the court, for example, or in a tax authorities, and the PA is asked to solve the problem in a positive manner, in an ethical manner. Are we prohibited, yes or no? And we had only few chats about this in the breaks, but these situations are different whether you are creating or supporting in a manner a tax planning arrangement knowingly, which has no credible basis. It's a different situation where someone else has done it, and now you are trying to bring them back to the good side, or to make an arrangement with or a solution for the client. Yes.
The taxpayer.
Yes. And that is a different situation. So we are silent on that yet, and perhaps a clarification on that is necessary. And for me, in all that circumstances, the conceptual framework is relevant. So that is key. So we are not out of the code, but the question is whether are you prohibited? And we have heard in many jurisdictions, it's also seen as an advantage and as a key role of a tax advisor to have an appropriate support also from the perspective of the tax authorities, that there is someone who is guiding taxpayers back to a credible basis, or a basis which can be defended or is defensible on court or administration level. So perhaps this is something we can clarify. We are not yet there to say in the code or in the basis of conclusion, but we have noticed that there are jurisdictions where there is a role for tax professional to play in bringing client back to a credible basis, or to a situation where the conflict can be solved.
This was example, of course. If you consider another your example, which is a transaction where there are underlying tax planning advisory services that may be credible or not having a credible basis, it may be that it is not a matter of restoring the original because it is not in the mandate, but
right.
The tax advisor should be allowed to work try to minimize the situation, try to rectify, or try even to advise another party how to set up the transaction in order to take risk from this situation. So this is something that I think it is worth clarifying.
Thank you. Mark.
I just wanted to, I think, also share Sadia's point, which I think is the related services material is helpful, but it's, to my mind, wrongly positioned. And I think if you were to move it up, it would better frame the context for this section. And I think because you sort of go through at the moment and you sort of get to the end and you sort of go, yes, that's what it means. Actually take that away at first. I think it makes the section much more accessible. Thank you.
Thank you. Rich, please.
Yeah, I think I'm echoing Luigi on everything you said, because if I understand what we're saying here is, if you're providing a related service and somebody else did the tax planning, you need to do the diligence to understand it, right? That seems to be what 9A, I think it was paragraph 24 said or something like that. I'm not so sure your first paragraph there, this is a minor point, makes that clear in 26A1, but thinking about what you gave the example, like it wasn't done ethically or it wasn't done properly, you're defending it, the client now in court. I think that's fair. But in some of these things, like they're doing an acquisition and the target has put something in place, I think to Luigi's last point, I mean, it might not be unethical, it might not be, it might have a credible basis, but it might not be complete or thought through enough, and you wouldn't want them not to be able to get the right advice, right? So I think that's all part of that same clarification.
Yeah, I think we have to see two different situations. If the PA is, I'm saying, healing somehow
Yeah.
the issue. That's fine. But we don't want to see a situation where the tasks are divided and you have limited scope
And everybody does
engagements,
this.
and everyone is blind and everyone sees that the overall structure has no credible basis, but you are limited on only that nitty-gritty issue.
Yeah.
I think that is a situation we don't want to see. So
Absolutely.
I think these are the two extreme I'm mentioning, and we have to probably make it clear. Sanjeev.
I think, Rich, I think your point is that if someone comes to me post doing something to say that, will you defend me, right? I think that's the point which you are trying to reach at. And I think as long as I believe that what the client has done is right, I would defend him, right? I would believe that the basis is credible. And then I go back to the code somewhere in the section it's there to say, as long as I believe that's credible, I have no hesitation in defending him. But if I believe the thing is not right, should I defend him or not is a question. And that is where the fundamental principles will come in. That's, I think, how I read it.
But I do think you should be able to give them advice.
Oh, absolutely.
That says this isn't right or isn't complete.
I agree. Yes, I agree.
And find solutions to say you should go to the tax authorities and make this and that, or there is an alternative possibility, whatever. Yes. So in some jurisdictions, there are possibilities that if there is something wrong, you can do with the help of a tax advisor, you get relief because you are voluntarily disclosing a misbehavior, and then the tax authorities are saying, fine. So that is a tax advice, even though you know that the client had made a misconduct or even a tax fraud, but there's a solution because you have seen this many times in jurisdictions where some income which were in a certain jurisdiction were not declared. And then you had the possibilities in a certain period of time to go voluntary to the tax authorities and you would get relief. So it's a issue on a non-credible basis, but it is supported by laws and regulation, for example. And I think that is something we don't want to prohibit. We don't want to overrule, again, the laws and regulation of a certain jurisdiction. Okay. Okay, thank you. With this, I would say we go to the next. The role of the PA in acting in the public interest. So we get, I would say, significant support, broad support. And I think we had only heard views we also have heard before. So the question that there are perhaps different public interests. It's not one global public interest, so there might be differences. And also the issue, and there we got I would say, unanimous support that the role of the professional accountant is also to make the client able to navigate through a complex tax environment. So it is in the public interest that the tax advisor is serving the interest of the client, but there are limitations. So that is the real issue in this public interest definition. So especially in cross-border situation, which was also raised, there was some sought for clarification. The question which skills a PA should have to consider global issues. And one recommendation was that we should not, in this part, cross-reference to tax evasion, because tax evasion is clearly NOCLAR, and it would be not appropriate to have it here. So that's why we have only a few proposals of change on the next slide. The first one is a conforming change from the expert task force concerning expertise and experience. And also in the second paragraph, 384A2, we are proposing to delete the cross-reference to tax evasion, and the rest is editorial. So we will not include a definition of public interest, but we are describing the elements. And we think, after reviewing all the comments, we think that we had a balanced approach in our exposure draft. So only this cross-reference, that's a material change to tax evasion, would be deleted because we have in other sections, NOCLA section, and we are cross-referring to NOCLA at appropriate stages. So that's our proposal here.
Thank you. Any comments? No? Thank you. Galen, please.
Karen, is your,
understand.
is your microphone on? Yeah.
Thank you. I understand where you're coming from on eliminating the tax evasion, but it is sort of the elephant in the room here on this project. And I wonder if there are other words that could be used, like, and I have to turn this so I can read it, what I had written down, and avoid strategies that might otherwise minimize responsibilities. It's just a thought. I mean, I get the evasion part of it, but it is sort of a, who commented that on this and particularly objected to it? Was it firm? What was the profession? Who was it?
Profession, it's for the profession, yeah. But we have a cross-reference. You're looking for the 380.6. Yeah, 380.6, where we have it. This section does not address tax evasion, which is illegal. So we have a clear, yeah. So that's why we thought it is better positioned there. Gray, it's illegal, yeah. So
it's illegal.
Tom, please. Sorry, Gavin, you had, no.
I'm done. I'm done.
Thank you, Tom.
I totally echo Garen's point. On deleting the text evasion, it's an and putting to the reference to the 380.6. It's a total different context. So so it doesn't have the same meaning. I mean, I totally echo Garen. We need some sort of the expression. I don't like to stick to the word tax evasion, but we need some word for reference to the some elephant in the room.
Oh,
Yeah, Gloria, please.
yeah, I just wondered, listening to these 2 points and looking at the flow of this and this title, Professional Accountants' Public Interest Role in Relation to Tax Planning Services, whether we think about moving that tax evasion is illegal. I can't remember, do we reference NOCLAR in that as well? Yeah, we do the reference, whether we put that first in the flow, because in other words, for the avoidance of doubt, before we go into all this other discussion, bam, because it changes the tenor a little bit, but it doesn't change the language we're using. So for me, maybe that highlights your point and your point. I don't know if that helps.
It does.
Okay, it's a thought.
I mean,
Sorry, not to words. It doesn't change language, but it does change the dynamic of it.
the background for this comment was to say that's crystal clear.
Yeah.
And if it's acting in the public interest and we are questioning that tax evasion might be an issue, it's crystal clear that's not in the public interest. So that's why people thought it is a little bit in the direction that we are thinking that some people are acting in the public interest in the context of tax evasion is not the right context. So that was a little bit the feedback we received, because that is something of non-compliance, and non-compliance is always not in the public interest. Here, the question is, what is in the public interest? NOCLA is clear, and then we are starting to discuss, it's more this type of thinking, not to mix this, because otherwise we are not as clear as we should be, that we are here thinking on the role, but you can consider this.
Respondents were generally happy with the direction we're taking in highlighting the PA's role in protecting the public interest. They were very much supportive of it. But they say when you have tax evasion in the paragraph, it taints the whole meaning. You want to promote PA's role in promoting public interest, and yet you say there's a chance they might try to support the client achieving tax evasion. It's sort of very contradictory to what we're trying to promote with these paragraphs.
Evasion is just such a strong.
Yeah. Mhm.
That's why.
Okay.
That's why I understand where you're coming from.
Okay.
Shumam, please.
Thank you. I supportive of the direction. My issue is where this evasion should be located. Currently, it's located, it's moved down to 6, paragraph 6. But this is a requirement. We start, this section doesn't address tax evasion, which is illegal. It doesn't quite fit where. So
Okay.
the suggestion is move further down to the next. That's my contribution.
You could also move it up and say, okay, we are addressing this, we're not addressing this, and now what are the requirements for what we address? No? But I understand that psychologically, starting with tax evasion is a little bit sensitive.
We will discuss it. The other possibility is just to drop the term tax evasion and to keep, not to circumvent them, and through tax evasion we will delete because it's a term, it's a hard term. The other one is only language around. Perhaps that is a possibility to pick up your point, Tom and Galen.
Yeah.
We will discuss this in the task force. We have understood, but I think it's common sense that, and that we want to make it clear, tax evasion is one, and acting in the public interest, and our scope is something different. We are enlarging now, so to say, the thought process to this gray zone, and the other part is not gray, it's red, so to say, or dark. Right. Dark red. Yes.
Thank you, Jens. I think your last suggestion would be my suggestion, but I did not want to make suggestions at this stage. So, yeah, the task force will consider. I think that it's clear that the concerns of the board and the many proposals, you'll see which one addresses better these concerns at the same time that you address the comments that you had. So, thank you.
Okay. The next point is a credible basis. So you all know our journey to find the right term, appropriate, reasonable, all these terms, and we decided as a board to use the term credible basis because this term is, as we thought, jurisdiction neutral. It's not defined clearly in any jurisdiction, so we have no problem that people could look at it from a different perspective. So that's why we are very happy to see that most of the respondents were very supportive. There was the ask for more guidance material, so more examples, and that is something we have to consider. There were some concerns, but I would say no new concerns. We have heard with every term, subjective, it's presenting practical challenges because in different jurisdictions we have different approaches, but that's exactly what we want to address. We want to address credible basis is a term which needs to be fulfilled with a local jurisdictional specifics. So that's why it's a generic term, which you can't define in the end totally, because we are referring to subjective, geographical, cultural, social, economical environments. So that's why generally, we want to keep the term. And the other point is, which we heard, and that is something we want to take on board, is some respondents asked for clarification on whether the credible basis determination should be reconsidered when circumstances changes and what impact that this might have. So perhaps these are the main comments on that topic. And on the next slide, you see our proposals. So we keep the term of credible basis because it's jurisdiction neutral and a global term. We want to add also here the term or advising on alternative arrangement that has a credible basis. That is here something which also refers to that what we mentioned earlier in our discussion, that we want to see the PA in the role to heal, to solve the problem and guide the client to the better, to a credible basis. And then we have a new requirement, R380.12, and it is if during the course of the engagement, the professional accountant becomes aware of circumstances that might impact the previous determination of the credible basis, the accountant shall reassess the validity of that basis. The important is in the course of the engagement. So that is the scope of the reassessment, because we don't want to make it 2 years later. We have to reassess something which has been done. That's that's more a clientship relationship, whether you have in your legal system a duty of care. Here it's the ethical issue of a credible basis. As long as you are in the engagement, you have, if there are indicators, so to say, to reassess. So that's our proposal to the board.
Thank you, Jens. Comments? Hector, please.
It's more a question than a comment. The word circumstances is something that we have defined. It's something that has a lot of content in the code.
Fact and circumstances it's not a defined but frequently used term. We are taking with this all the environmental, you can say, issues.
It could go from a tax ruling to
changing legislation,
changing the strategy of the company.
Yes, okay. Yes. I think that's as broad as possible.
Luigi, please.
Thank you for for the clarification. I'm fine with the term credible. I think that is well explained. I understood, so I'm fine with that. I'm still a bit worried that or otherwise advice on maybe well understood by everyone. In this sense, it is clear now with the paragraph you added that advising on alternatives is on the right side, and that and this is clear. But in order to understand what advise on means, I had to go to 320C, as an example, where, in case there are any issues, the professional accountant, if disagree, advise the client not to pursue the engagement. So advise on would also include advice not to pursue. Mm-hmm. So my point is it possible to clarify this concept of or advise on in the sense that it includes advice not to pursue, advice alternative, advice how to remediate, not in this order, of course, but in order to make it very clear, and because if you read the explanatory memorandum, and there are examples there, it is clear, but we need to have a code which is clear to everyone without the need to go. Okay. I know that basis for conclusion are relevant, but it would be clearer if it was embedded into the code. I don't know whether. Okay.
Thank you, Luigi. Rich, please.
Yeah, Luigi, I'm sorry. Yeah, and again, this might be something more for basis for conclusion, but the paper 9A made it clear, and I think we've long in prior discussions made it clear that credible basis is the likely to prevail is a higher threshold than credible basis. We didn't get that into the code. I don't know if it it would be nice to have it, but I definitely think it has to be, that statement has to be carried forward as a basis for conclusion. Because that, from a practical standpoint, is where a lot of standards are around the world.
Yeah.
Okay.
I think both proposals will consider whether we can clarify this, and you cross-reference both to the explanatory memorandum as minimum will be part of the basis of conclusion, but we will reconsider whether we can, and that would be in line with some of the comments we received to give more into the code, less in the explanatory memorandum. But on the other side, we have to balance it, not to be too prescriptive, because it's very, very broad as a term. So, but thank you for these comments. We will take them on board.
Thank you.
Right. The stand back test. So in the ED, the title of the stand back test is called Consideration of the Overall Tax Planning Recommendation or Advice, in case you're looking for those words in the ED. And it is about the consideration of the reputational, the commercial, and wider economic consequences that could arise from the way stakeholders might perceive or view the arrangement. And in the ED, in the EM, we did clarify that the test of the stand back test can be done at the same time as you're doing the credible basis. So it doesn't have to be sequential. It can be done at the same time as well, to clarify that. Generally, we receive support in principle of the task force proposals, and the respondents considered that the consideration of the stand back test is a very much a public interest element that PAs need to consider as they provide tax planning services. And it is important because it impacts the client, the employing organization, the PA, and also the profession. Keeping in mind, if these scenarios were to be made out in the public domain, how does it impact everyone in the whole ecosystem? Although we did hear that the general concern that respondents had in consideration of the stand back test was that it could be too broad. Respondents asked, what does the board have in mind when you need to carry out a stand back test, especially in terms of the wider economic consequences? Does that mean the PA need to undertake extensive economic analysis to come to the conclusion, and especially additional research when it comes to cross-border transaction? So there was a lot of concern that it will be a very onerous requirement on the PA to undertake. And some tax planning transactions may not require such an assessment, for example, a very simple tax return. We also heard that codifying such exercise of professional judgment could actually create confusion in the PA's professional judgment and second guessing of their judgment. And lastly, we like to point out, a respondent also mentioned that the stand back test provision should be deleted on the grounds that it falls squarely into tax morality, tax fairness, and tax justice domains. And the task force took this feedback very seriously in coming up with our proposed revisions. First of all, the task force like to reinforce that the stand back test is a requirement to consider the wider economic consequence, and it's not to perform an economic analysis. It is clarified in paragraph 380.12a2 in the ED that we highlighted that the PA would require to have an awareness of the wider economic consequences. So what does that mean? It means that it's an acknowledgement that there is a perception attached that stakeholders may not view that the tax planning arrangement will be acceptable or can be acceptable if it's not within the bounds of the tax laws and regulation. So the stand back test is to allow the PA to decide whether to be associated with the tax planning arrangement. The task force also like to reaffirm that the consideration of the wider economic consequences, it is not about tax morality, tax fairness, or tax justice, but it is about recognizing the practical reality that wider economic consequences of a very large amount of tax involved in some cases might have some impact on how stakeholders can perceive that tax planning arrangement. So, consistent with the PA's duty to consider not only the preference of or the requirement of the client or employing organization, but it is also in the public interest that the PA will need to make the client or employing organization aware of the risk that's attached with such perception. Lastly, the task force would like to clarify that the stand-back test is not so much a risk management for the PA, but it is about informing the client or employee organization of the risk of adverse perception of wider stakeholder community. Think about if the events took a significant turn for the worse, the PA might be criticized or worse, penalized for not having informed the client or employee organization of the risk that's involved with that tax planning arrangement. Therefore, we like to confirm that the stand-back test is about providing the client or employing organization with all the information that they need to make an informed judgment about the tax planning arrangement. It is consistent with the PA's duty to comply with the fundamental principles of professional competence and due care, and also the PA's overarching responsibility to act in the public interest. In response to the comment about the work effort in applying the stand-back test and suggestion, there was also a suggestion to include a materiality factor. The task force notes that the requirement calls for the PA to exercise professional judgment in applying the test. Hence, it is logical that the more complex the tax planning arrangement, the greater the consideration, and vice versa. If the tax planning arrangement is relatively simple, there might be little or almost no consideration. So to further emphasize the consideration of wider economic consequences, it is not intended to be more than just an application of the general understanding of the current economic environment. And so the task force is proposing a refinement to paragraph 380.13a2 to clarify that position. And I'll pause it to see if we have any reactions from members.
Thank you very much, Carla. Mark, please.
I absolutely understand and I think endorse what the task force is proposing. The only thing that sat slightly awkwardly with me was the addition of the word general. Because I sort of understand, the lead-in piece with an awareness of the wider economic consequences. But actually, the bit that you've added about the current economic environment, it's actually the application of the understanding of the current economic environment to the tax planning engagement. And I wonder whether general underplays it. And actually, we could just delete the general, but I expect that that's a discussion that you've had more times than anyone around the table would care to remember.
Thank you, Mark. Hector.
Thank you. This is a question, and I'm aware of this is post-exposure draft. So, but you have in section 388A1, that is responsibility of management and those charged with governance to have somebody helping them understand the consequences. And linking that to this section, I was wondering whether we shouldn't say that it's part of this stand-back test to understand the risk appetite and to have a conversation with those in charge of governance, but it's not here. It's just it's like understanding the context, the economy, but each organization has a different appetite, and you may have boards that are more aggressive and boards that are less aggressive, and I don't see if it makes sense to have some dialogue. Maybe it's somewhere else.
Thank you, Hector. Jens.
In response to Hector's feedback, yes, very much in agreement with what you mentioned. When we came up with the proposed ethical framework, we thought about in terms of the thought process. So the steps the PA would undertake when they approach to either plan or structure or give advice. So the way that the ED structure is, we wanted to clarify the responsibility of the management. And also then you see paragraph of responsibility of all PAs where they're required to undertake all the diligence they need to undertake to understand the client, the risk appetite, before they come to even make an assessment of the credible basis. So while it's not explicit in the stand back test, because we see that as something that PSS undertake before they've gone into look into the structuring or the planning of the tax planning arrangement itself. I don't know if that clarifies.
Not sure if I would say this a requirement, but it would, in the description of what you should be thinking, that is usually a key element in terms of assessing whether this planning is suitable for this type of entity, beyond whether it's a general a foundation or a corporation, this corporation in particular.
I would say this is part of 380.9, knowledge and understanding of the client, but that is a little bit because the risk appetite, the structure, non-profit or whatever organization, that should be covered by understanding the client.
Yeah, and I was thinking along those lines as well. I think there are maybe two angles to the question Hector has raised. One is, as Carla and Jens have explained, there will be the time to engage with management and those charged with governance. If the PA is engaged to provide advice on the tax planning arrangement, to design the tax planning structure or whatever it might be, to have that conversation with management and those charged with governance, and that would be the time then to have a discussion about risk exposures, potential consequences, and so forth. The other scenario would be if the PA is asked to advise on a tax planning arrangement, perhaps it's been done by somebody else, even as part of a related service as we've discussed earlier, and the PA wasn't involved in the original design of the tax planning and therefore wouldn't have been involved in the conversation that would have happened if the PA had done the initial tax planning arrangement. And in that case, the stand back test asks of the PA to do that stand back, do that reflection. And if the PA has a hesitation and doesn't believe under the code, it would be the right thing to do to go forward and advise the client, given the consideration of the potential wider economic consequences, etc. To then advise the client about the PA's decision and to explain why, and that comes then under paragraph 380.14, and that is a requirement to not recommend or otherwise advise on the tax planning arrangement, and to inform the client and explain the basis for the accountant's conclusion. So that would then be, as I said, that's a second scenario under which then the PA would go ahead and explain the reasoning for the PA's conclusion.
Yeah. Just a small comment. When I was searching for those charged with governance, I saw that the PA is supposed to go to them if there is no clerk or there is a recommendation not to go forward because it's too aggressive and to explain the reasons. What I thought, and maybe this will make the process too complex, is to say that in the assessment of the suitability of the planning for that client and for the appetite of the board, maybe there is a venue of, and I'm speaking of experience, when you sat with the board and said, you want to do this, you understand the risks, some of them would say, oh, okay, then maybe is there an alternative? We can do it in a different way. And that conversation is not just delivering a conclusion, but using the feedback of the board to make your own mind whether the planning is correct.
So we have this type of coming back where there is a disagreement, but we are then in the level of no credible basis. So in this part, here we have a credible basis, but the PA is saying, I don't want to be associated with this stand back test. So there we are saying it is the responsibility to inform the client, but we are not going into detail whether it's the CFO, the board of directors, the supervisory board, the non-executive. That's a little bit up to the professional judgment because it's in this term. But if it's not a credible basis, we are in the dark zone or the darker zone, then those charged with governance should be informed. So that is a little bit the balancing that in the situation of the stand-back test, you have all the information and you make a judgment. And whether you are talking to A, B, or C, that's part of your association or what you want, how you want to be associated with, because you make a proper decision. And because you can't say it's wrong what you're saying, dear client, because it's legal, but I don't want it. So that's why a little bit not an obligation to go to those charges. It might be something, it could be something, and we discussed this too, if there is a transparency of we want to do that and that tax strategy in the future, and this is inconsistent with something they want to proceed with, I think that is a different situation. But these were examples we discussed during the thought process on that drafting.
Yeah, and if it might help Hector as well to maybe to understand basically a bit of the process as to how the board originally envisaged it, and the board had that conversation in developing the exposure draft. The conversation with management and those charged with governance is not really necessarily coming all the way at the end. It is a conversation that can happen almost kind of simultaneously as the PA is developing their tax planning arrangement and making an assessment as to whether there's a credible basis or not. So in other words, you don't have to wait until you've done everything and then you decide, oh, actually, I should have had that conversation, but it can happen at the same time.
Thank you, Ken. Rich.
I have kind of a couple questions, maybe we just do them in order. So if I understand the big box on the top right, the reason for the word general and current environment is to deal with the issues of, do I have to do an economic quantitative analysis? Respecting Mark's thoughts, I still think you need something like general in there. Otherwise, it doesn't totally alleviate that. Maybe that's not the word, but I support having something there. I'm still a little bit concerned about when I look at the tax base concept and I have multiple jurisdictions. Well, it might be positive to one jurisdiction's tax base and negative to another's. And that's because one jurisdiction has chosen to use tax as an economic development opportunity. Whose view prevails in terms of whether there's, how you factor that into this discussion of whether you would proceed? And sometimes when I say multi-jurisdiction, it could be 4, 5, 6 countries in that. And that's where I think this is a practical question, but it's a real question in terms of what goes on in the world.
I think very short answer, it's your professional judgment, but I know what you mean. It's difficult to say, but we are in the space where I say there is a credible basis. So it is transparent. Every jurisdiction would say, yes. We are looking at that Starbucks cases. So where you can say each and every involved jurisdiction is happy, but the customers or the public at large will react. So it's not about to say you have to go now this or that way. It's another type of discussion with the client to say, are you aware of a situation where there might be a public discussion on that? So If that is the wider economic.
I'm not sure that example, someone would have realized how the public was going to react in making this assessment. And there are other, the problem is the requirement. I think there's a real concern that the requirement establishes potentially legal liability if things go badly. I'm not advocating to take out the stand back test, but it just seems like we have not adequately explained somewhere the practicalities and how the public is going to react. I mean, that could be very different jurisdiction by jurisdiction, or it could be unique to something that happened related to that company that wasn't necessarily because of the tax planning, but that's an add-on to the, it's just, they're not happy with the company. And so now they're going to jump on this. I think that's hard for the professional accountant to assess. Secondly, I have a disconnect between the phrase in paragraph 12. I'm reading this right. I'm sorry, 13, the requirement, and the change to 13A2 with the general. The requirement has something about the wider economic consequences. And maybe the answer to that is you're just saying, look, that's A2 tells you how you consider.
That was the intent.
All right. And then I don't know that you were going to cover this, but you get into the multi-jurisdictional right below that. And and if you're going to cover it later, you've added this bullet under 380 15A2, which somehow seems relevant to this analysis under 13. There's a bullet that says where there is globally or nationally accepted principles or practices regarding disclosure, similar situations to tax authorities. I get that it's disclosure, but that also might suggest that the idea, the planning is recognized. Again, going back to one jurisdiction using it for economic development. And so I'm still kind of concerned that you can look at it and say, yeah, country A and D aren't going to be as happy as countries B, C, and E are going to be in this deal, right? Whether we move jobs, we just move taxable revenue. So I don't know where you're, maybe there's some stuff in the basis conclusion we can help explain this better. But I think my general concern is could be fairly burdensome and could be one of these things that after the fact, there's a lot of second guessing coming out. Then I have one other comment. As we move towards profession agnostic, this is an example where we have something, and if we decide to leave it in and all that, this is not what other practitioners in the tax space would be held to in terms of having to consider it. And so we should be prepared to emphasize this as an example of if we include the look back or stand back, we should, I think, emphasize this is an example where this code stands for a higher ethical standard.
Yeah. So.
Thank you, Rich. It's a good point. Ken, please.
Thank you very much, Gabriela. I just thought if maybe it's to help the board bridge a bit of the the understanding and the sort of expectations gap in terms how this provision was originally intended to operate. This is not, and maybe I think it's probably highlighted somewhere in the board issues paper. This provision is not addressing your bread and butter tax planning arrangement. If I'm advising my owner manager, owner shop kind of type of client in terms of doing some tax planning for them, maybe it's for estate planning purposes or trying to minimize or optimize, whatever term you want to use, their tax affairs. This is not going to move the needle, in terms of the economic consequences of the particular jurisdiction where they're located, and it's very unlikely that they're going to be, unless it's they own a chain of fast food restaurants or whatever, they are not going to be operating in 5 different countries. So this provision is really targeting potentially the highest end of the spectrum of tax planning arrangement, where really you have a very sophisticated firm of tax advisors. They have the expertise in the different jurisdictions. They know what the tax laws and regulations are. And essentially they're putting together a tax scheme that cuts across. Or if you're not dealing with multiple jurisdictions, maybe you're dealing with just one country, but the stakes are very high because of the amount of tax savings that's involved. So that is what this provision is intended to address. It is importantly, it is a requirement to consider. It is not a requirement that you go, as to use Rich's terminology, do an economic quantitative analysis as to what the consequences might be. But it is really stand back. I mean, that's what we've been calling it. It is a stand back when the stakes are very high. Think about what it means in terms of what you're going to be advising the client on. So I think that context is important. I'm not sure whether we can build that in the code. It in some ways touches on the issue of proportionality, because this is precisely what this is intended to address. This is not about, this is not about me advising my grandmother about her tax planning needs. This is really about the big corporations, the multinational, etc. And if we understand that this is a context, then I think we can make that, we can make that assessment as to whether this is reasonable. And it's always about what is reasonable to ask of professional accountants, given their role in the public interest.
It's about also, we are here in the field of ethics. It's not about legality. And I think the whole exercise we are doing with this project is, first of all, to define the clear boxes, but we are also in this sort of uncertainty. And there is a remaining issue, even though you have a credible basis, there is a reality around us in those sophisticated cases, as you are mentioning, where we think under the Code of Ethics, there's an additional requirement for very high sophisticated professional, not only to see what he has to see, but a little bit the broader perspective. I understand fully your concern that it should be proportionate and not give a reason for wrong expectations, but that is a little bit the intent of that. And looking at frameworks globally in certain jurisdictions, it is something which is coming or developing. And there we are taking this on board, this wider expectation of a high professional advisor, and include it in this framework here. That is the idea. It's not to limit or extend the obligations in establishing the basis, but enlarging a little bit the scope of the horizon, so to say, in which we can't ignore the environment, so to say, in this respect. And that, because we had these cases and the reputational issues for the profession, all the professionals were included, and we want to react somehow on that with a principle-based concept. And that's perhaps difficult to draw, but that's the background.
Thank you very much, Jens. Laurie, please.
And just briefly, I'm very supportive of this section, recognizing Rich's points, which I think are real concerns from a practitioner standpoint. But I think, Jens, to echo a little bit what you're saying, and maybe saying it a little differently, we're in the ethics space, so we've laid out a whole framework. But at the end of the day, we need to bring in this. You need to step back and use your professional judgment and all the tools and skills you have, and also all your awareness of, the world at large and how things might be. And we cannot get away from the fact that ethics provides somewhat of a safety net by doing, I actually think, by doing this analysis, because in some sense, there will be some of these things that people will decide not to go forward on because of this test. On the ones they go forward, I would hope that by using that ethical step back judgment, they'll have thought through the risks and the issues with their client, and those will be manageable, shall I say. So I think there is uncertainty, and I think in some ways this underscores that. The other thing I would say is one of the things that we've heard from a lot of the practitioners around the world is when you build a principle-based framework, make sure there's room for our judgment in that. And this, in some ways, does answer to that, but also provides, you have to have some due diligence and responsibility when applying. So.
Thank you very much, Lori. Rich, please.
I agree with Ken. This is about the most sophisticated situations, but Lori just made a great point. I think what's a little bit of a challenge here is I think that we heard this from feedback from the various outreach you did, is that hopefully in the profession already, given the existence of the code and all that, in most cases, when you're looking at tax planning, there's a business purpose for what's being done. It's not just the tax issue. And so I think what you're going to see is, you know, there are companies who manufacture in a dozen or more countries, and they're looking at where should the new plant go, right? That has to do with market penetration, distance to delivery,
Cost of service.
labor and other costs, the utility costs. Can I be green energy versus not? Tax is a part of that. And I think in fairness, at the end of the day, out of that decision, particularly if it involves closing a plant somewhere and opening a new one somewhere else, there is going to be a public reaction. And that's where I'm a little concerned, is that that reaction might be more about the business decision as opposed to the tax. And I think we need to, I don't know, again, I think this is basis for conclusion or something like that stuff. Just kind of explain that we need to recognize that there are a lot of factors that go into this, and totally agree that we should be stepping back and not doing stuff that we think is just doesn't meet the overall right thing for the current environment. But I do think we need to have some recognition that this can be very complicated in terms of the factors that give rise to the reaction that you're thinking about addressing in 380.13. Thank you.
Okay. Very briefly, I think Laurie and Rich made the same point. I think all of us are doing this today also. You see, when we advise the client search, we look at, you know, the 10 other reasons why you want to move a plant. You know, you do all that. Tax is, I think, one of the consequences of that. Tax may play a major part in deciding, but tax doesn't drive the businesses. And I think as long as that is there, I think this is what we do always. It is just that in hindsight, someone may get up and say, look, what you did 5 years back was not right. And that question can come up anytime. And I think that is where I think the thought process to bring home this point that if someone is not doing it, should be doing it, is very critical. I mean, I look at it in a different way. All of us do it. Maybe some people were not doing it. Some, hopefully not. So this is more a reminder that, look, you are supposed to look at this in a wider way, that if this question is asked 5 years later or 10 years later, hope you've looked at these public interest issues also. I see it that way.
Thank you, Sanjeev. Very good comments and very good discussion, I think.
Sorry, can I just
yes,
confirm
of course.
before we move on? So to clarify, we did have a question whether a respondent suggested if we should delink the consideration of wider economic consequences from how stakeholder might view it. And says I understood with discussion, especially suggestion from Rich, that whilst we acknowledge it is complex and complicated and it could have various factors, that we would need to clarify this in a very extensive explanation in the basis of conclusion document, and choose not to delink from the way the stakeholders will view the arrangement.
Yeah, no.
Okay, thank you.
Thank you. Do you want to move to the next section?
I could. We are halfway there. We're 10 minutes away from the scheduled break. I could continue. Yeah.
Okay. Clear the gray zone.
Clear the gray zone. Next thing is the gray zone, an application and conceptual framework to navigate the gray zone. As we mentioned earlier, I'd like to reconfirm again that this project is not about aggressive tax planning, but it is about navigation around the gray zone, not the red zone, the gray zone, and the various ethical dilemmas that PAs might face. Generally, we receive support and the task force recommendations in the ED. So in the ED, a significant part of the proposed ethical framework is the application of the conceptual framework to assist PAs to navigate gray zone and other tax planning circumstances. The ED had examples that clarified the types of threats that might be created, the factors that are relevant in assessing and evaluating the level of threats, and the associated actions that might eliminate the threat or actions that might be safeguards. So we like to clarify the examples in the ED. It's not an exhaustive list. It is an example, and we receive tremendous support for the section that we proposed in the ED. Okay, screen.
Go back to the gray zone.
Yeah, it's disappeared a little bit. So no doubt we heard from respondents that defining the gray zone is going to take a lot more than a crystal ball skill to navigate, or we wouldn't be here today. Respondents were not convinced that it would be a straightforward exercise to establish, for example, identity of the ultimate beneficiary. And while the task force is in general agreement that it's not an easy task in practice, although we like to reaffirm that it is something that you would have to do, inherently need to do in taking on an engagement, so that you are not accidentally representing individuals who are, for example, being sanctioned. So whatever that case may be. So we believe that the task force reaffirms the need to undertake actions for you to find out who the ultimate beneficiaries of the tax planning arrangement. The other recommendations that we had received was in regards to the potential threats. We were tasked with considering whether we would put an example for self-review, and the task force in its agreement that we should have a self-review threat. So we're proposing the revision to paragraph 380, 18A1 in example that you see in front of you. I'll pause here to see if there's any reactions before I move to the next slide where we make further revisions.
Thank you, Carla. Sunam.
Yes, I agree to include the SRT, but I'm wondering the new description of SRT is correct or right. Currently, it said SRT might be created when a PA also provides other services to the client, such as valuation, the outcome of which will be relied upon when providing tax planning services. I'm wondering whether it should be written in reverse. I'm trying to understand. And also, in connection with that, I just asked us to revisit to section 604 12A1 is also describing SRT. So it's very confusing to me.
Thank you. Rich.
Yeah, I had the same reaction to Sunam, and maybe even on a different level. You might be doing a tax service that's part of a longer project, right? And it's all part of the project. And so I'm not sure, for example, if you did evaluation service in phase one of the project, it means you can't continue on the planning in the later phases. So maybe a better example, or maybe just looking back to the 604 as Sunam said might be helpful. It's more, it's not the concept, it's the.
Okay.
We'll definitely take it back for task force consideration. Thank you.
Thank you. Luigi, please.
Thank you. I had the same reaction because I read it many times, but I was not able to, maybe me, I was not able to understand what was the purpose and what was the meaning. Because I don't think that there is nothing wrong that a tax advisor provides a very complex service that is based on different activities that are all linked together. The final outcome would be the tax planning, the tax planning advisor, the tax planning service. If it has a credible basis in the law, I don't think we have any issue, even in terms of self-review, even though there are different activities that could have, say, some dependencies, one from the other. So this is not clear to me, frankly, and I ask whether it is possible for the task force to think of it. I have another comment with respect to fourth ballot, where it is not clear to me what it is meaning with that might be perceived to be excessive, because it is very generic. Someone could perceive it, some other no. I wonder whether further clarification on this point may be appropriate, because frankly, I started thinking, but I was not able to really understand how different users of the code could reach consistent conclusions, frankly. Okay.
First of all, just a clarification. We take this on board, just a clarification. We are not saying at any stage here you are prohibited for doing that. We are just highlighting potential threats. And then in the next paragraph, which factors, circumstances might bring them to an acceptable level, just to bring it into the context. And there is transparency and other issues which might bring those threats to an acceptable level. But we were looking for examples which are clear, so that we will clarify, but just to set the context. Thank you.
Hector, please.
Sorry, again, a question. This issue with the fee that might be perceived to be excessive make me thought about contingent fees.
We have it later, the contingent fees as an issue.
Okay, but it's also covered. Okay.
Yeah.
So before I move along to clarify that the board would like us to get a better example of self-review threat. And also we made, Luigi made the comment before I got to it. We wanted to adjust the reference to significant fee as respondent found it to be confusing what the significant mean in various jurisdictions. So we thought the terminology that we're proposing would be a better example, but we'll take that on board, that we should review what we mean by that, and we might come back. Yeah. Okay. So it's not so much perception, it's the at what level of the fee that it's going to be of concern that will raise a self-interest threat. Okay. Thank you.
Thank you.
Just do that next slide.
Yeah, okay.
The next revision will propose, the task force is proposing, it's an example that we added in paragraph 380, 18A2. There was a recommendation for respondent to add in an example of prepackaged tax planning arrangement, especially in the further in the text that we talk about the party provider and prepackaged tax planning arrangement. So they wanted us to highlight this as an example that might increase the level of threat that the PA might experience. And the task force thought it's a good example to add in. And the rest is to address the terminology alignment with the expert task force. And the other revision is minor editorial, that was a recommendation. So I'll post it to see if members have any comments on the revisions.
Yeah, thank you. I have basically two comments. One on pre-packaged tax planning. I guess the meaning, and I do not disagree. I wonder whether pre-packaged could be in a way defined, clarified, because it is a new term. And it is, unless I'm wrong, it is the first time it appeared on the codes. It may be read in an inconsistent way across jurisdiction and between users. I'm not in disagreement, but it is. Then I have another matter which is not clear to me when we speak about as not being challenged by court or let's say. It is, I don't know which model it is. It is where established practice that has not been challenged.
Yeah, it's a fourth bullet point.
It is fourth.
Yes.
I wonder whether it is sufficient to be challenged or it need to be successfully challenged, because we have many challenges in this space. Not all of them are successful. And the fact that there is a challenge is per se not relevant in my view. But
I was gonna say, just the challenge could be in different stages of completion. And so it's a factor to consider. And there are some challenges that are more significant than others. Just a factor to consider, but I understand what you're saying.
And we are not saying because it's challenged, stop to do this, or it's just a factor. And the degree of challenges might be exactly what you have to judge as a professional. So I think we are not saying if the challenge is here, threat is there. So, but that's part of the factors you have to consider. And for example, if you're saying in this jurisdiction, in that matter, there are many cases and we have a variety of, and it's everything open. I judge this, and I have, for example, also considered to have communication with other experts in my firm. That is a reaction to that. But the challenge of a position in a tax treatment might be a factor to consider whether it's a high level of threat or lower level of threat. So it's open. It's not prejudging.
Phrase has been used on net for net services. So 604.12.82 already used the same term,
Yes.
exactly same.
It's a factor. Thank you.
Okay. Shall I stop here? You still have a slide, one slide on this?
Break.
No, it's a new topic after this. So we
Okay,
could
so
break.
I think we should stop here and break for 20 minutes. Thank you very much. I think that we have been very effective. And we will reconvene at 11:20.
Yes, and the two quick administrative announcements. One is maybe not so much administrative, and that's the approval of the board minutes, which we will take after the tax planning session.
Okay.
The board does have to approve minutes. And secondly, these offices will close at 4 p.m. sharp. So anybody who was planning to stay beyond 4 p.m., make sure you're not logged in here for the weekend. But you're very welcome to go to the APAC offices if you want a lounge somewhere to wait for your flight. 4 p.m. is the latest you can exit. Thank you.
So time to start. Just on time. And Jens, I think we can have almost everybody here. Welcome back. I hope you're rigor as we go through the next section, few sections. And we like to start off with disagreement. So they, I hope you're in agreement with the task force proposal. The proposed ethical framework in the ED contains certain provisions to address circumstances should a disagreement arise with the management of the client or employee organization regarding the tax planning arrangement. Right. Again, respondents were generally supportive of the principle that the task force proposals, obviously with further recommendations. Some of the concerns are on the slide deck, and it is about the requirement for the PA to consider advising the client to make a disclosure to relevant tax authorities or the external auditor in the event of disagreement. And the worry is that this might inadvertently cause the PA to violate the client confidentiality, or in some cases that PA would need to seek client's agreement before they make such disclosure. We also heard from respondents that if they would like further clarification on the requirement for the PAPP to consider withdrawing from the engagement. And this doesn't seem quite proportionate to the requirement that's in section 280 for PAIB, which is considered resigning from the employing organization. We'll come to that in a second. So in consideration of the comments, the task force reaffirms that it is logical after taking all the necessary steps, the PA might determine that the tax planning arrangement does not have a credible basis in laws and regulation. And so if the employee organization or client disagrees with the PA should then communicate that reservation to employee organization or client. The task force is of the view that the communication should take place irregardless of whether there's an adverse ruling to the tax planning arrangement. And hence, we're proposing revision to requirement paragraph 380.20 by taking out the words in event of an adverse ruling. And I'll go on to discuss the other revisions before we take any questions. So if you just please bear with me. In the case of disagreement with the client, the task force is of the view that there is transparency around exercise of professional judgment and making the appropriate disclosure to the tax authorities, especially when there is a need to explain the commercial substance to the transaction. So therefore, the task force believes that there should be no change to the requirement for the PA to make disclosure to the requirement for the PA to consider advising the client to disclose the arrangement to relevant tax authorities. Regarding the concern that it would create an expectation that the PA would breach the client confidentiality, the task force notes that the requirement to address disclosure is by the client and not the PA themselves. To acknowledge there is issues in some jurisdiction in confidentiality, the task force then proposed to make revision to requirement paragraph 380.21 by adding the words where applicable to bullet point B. Okay. The next comment about taking steps to dissociate from the engagement and what does it mean? The task force do not believe that the code should be overly prescriptive in specifying the steps, as the principle is clear. If the PA doesn't believe the tax planning arrangement has a credible basis or doesn't comply with the stand-back test, the PA should dissociate in some form or another in case of a disagreement. Hence, we're not proposing any further revision in terms of what does it mean to dissociate from the engagement. However, the task force has said recommend that the PA need to consider withdraw from the engagement and professional relationship with the client should be more tempered, given tax planning often involve professional judgment, a heavy dose of professional judgment, and involves significant uncertainty. So the task force is proposing to make further revision to paragraph 380.24. I need my glasses. 22, sorry. To clarify that the accountant shall consider where there is a need to withdraw from the engagement and the professional relationship, to clarify that. And I'll pause it to take comments from members.
Thank you very much, Carla. Mark?
So I'm broadly supportive of where the task force have got to, just in respect of 380.21b. Would it be slightly clearer and slightly sharper rather than having where applicable to say where required? Because in a sense, there's a sort of not necessarily the degree of optionality in it. It's either the tax authority requires you to do it or it doesn't. And then similarly, that then raises a question about C, even though I recognise you've not changed it, which is communicate the details of the arrangement and the difference of views to the external auditor, unless prevented by client confidentiality. And it's only because the first, where applicable, triggers the second one. Thank you.
Luigi, please.
Thank you. I'm broadly in agreement with the flow. There is just a matter relating to the beginning of the concept of disassociate, which it is not very clear to me, because we start saying the accountant shall take steps to disassociate. In other part of the core, take step to disassociate is pretty drastic. Let me use this word. So it is really the last measure to implement. Like, for example, on another matter, so it is not comparable, but just to give the tone, in 110.282, whereby first there is consultation, and then it said that consultation should not substitute the need to do something else, including taking steps to disassociate. And in this context, it is pretty clear that disassociate means terminate. So my point is it possible to reconsider this start of it is just a matter of wording, basically. I don't know whether something like the accountant should consider whether to disassociate or start the process. If the first part of the process, which is basically a communication part, resolve the matter, okay. If not, then disassociate. I don't know whether it was clear.
May I just react to that? I think that is our 380.20. So we have a known requirement for this communication. And then after that, 21 is after having had 20 without a positive outcome, then you take it there. So we have two requirements. First, to communicate and do it as you have said it. So that's why 21 is a little bit sharper, because the other requirement was before.
It is me, as usual. But what it is not clear to me, and this was the reason, it is not a fundamental matter.
No, I understand.
We say in 21, the accountant shall take step to disassociate, and then there are 3 communication requirements. And it is after that we decide to really terminate or possibly terminate, disassociate in this. So probably it is a meaning.
Okay.
Maybe it is fine, but probably it is something to consider.
Okay. Good. Thank you.
Just to maybe it's what we need to do with what Luigi is saying. maybe it's a step process.
Yes, after.
So maybe all we need to do is drop the accountant shall take steps to dissociation to the bottom.
We can consider here actually.
Yeah, so you sort of, okay, first, first you inform the client, but they still decide to pursue it. Okay, then maybe communicate internally, make disclosure, communicate with the external, audit. You consider all of that. Failing all of that, then you dissociate. Maybe it's just a rearrangement.
We'll consider
Okay.
that.
Mm-hmm. Escalation.
Seems like there are no more comments, so please.
You can proceed.
Multi-jurisdictional tax benefit, bear with me, there's a lot of big words in this section, and there's a tongue twister. In the ED, we noted that a client or employee organization might obtain tax benefit from accounting for the same transaction in more than one jurisdiction. So in that case, it was suggested that while it might not be unlawful, there is an element of public interest for argument for the PA to advise the client or employing organization to disclose to relevant tax authorities of the particular facts and circumstances and the tax benefit derived from the transaction in different jurisdictions. That's why we have a few paragraphs in the ED that addresses this topic. Generally, again, we receive support in principle of the proposal with recommendations. And I'm sure members would give us some of your feedback in a few minutes. The recommendations were about the development such as the OECD BEPS that says that the instances for organization to be able to double dip in jurisdiction are now being reduced with all these initiatives. So there was a concern that while we highlighting some of these provisions, and in one context, should the judgment be significant, judgment of significance be made? So there was a bit of clarity. And there was a particular advice to delete one of the bullet points. It's paragraph 380.14.A2, because it's in itself saying, if someone else is doing it, like perhaps we could do it as well, but it doesn't seem to be kosher in the sense that just because someone is doing it, we could do it as well. So the proposal that the task force is making is we agree with the recommendation to delete the second bullet point in paragraph 380.15.A2. And we added another bullet point that refers to globally or nationally accepted principles that might require such a disclosure in instances in a relevant jurisdiction should you undertake such a transaction, to make clear that there are currently requirements in place already where you need to make such a disclosure. So it's not so much that the code is instigating this, it is something that's really out in the market. In paragraph 380.15.A1, it is a clarification that requested of the task force to clarify that if it's an instance that the peer becomes aware of the client obtaining such tax benefit, to clarify the situation. So I'll pause you to see if members have any feedback on the revisions that we're proposing.
Thank you, Carla. Any comments? Please run.
So if the client is sort of double dipping, as you said, in different jurisdictions, but if they are properly representing the transaction, they're not hiding any fact, they're not hiding that, they're just so assuming the transaction sort of impacts or runs through different jurisdictions. And as such, as a result of this multi-jurisdictional transaction, they are eligible for tax benefits from different. What's wrong with that? Would they have to? You get my point? I'm just trying to understand what we're trying to say, and why should we sort of make a fuss out of it?
I don't know if it still exists. Now, I won't say which countries, but for example, there were provisions where in an internal to a group transaction, in one country, you are authorized to account it as a cost and the other one as a capital investment and then other deduction. So there was a double dip, not at the same moment, but and at some point in time, I think the countries were aware of that and they were playing with this as an incentive in their tax laws. And at a point, it became unacceptable. But it was before it became unacceptable in their tax rules. It became unacceptable on a society, press level, etc. So
Yeah, that makes sense. Yeah, I understand, and thank you for this example. But so my question, assuming so then perhaps the issue is not that they're benefiting from different jurisdictions, but perhaps that they are sort of window dressing or dressing up the transaction differently. So my point is, I'm just assuming if that is possible. Like you have a transaction and you decide to account for it as such, and you are consistent in how you are accounting for it across the board, assuming, I mean, if that is a practical example or a logical
there are a
example.
lot of differences between accounting rules and tax rules.
Yeah.
And so you can't make that reference.
And just to be clear, we are not saying that such multi jurisdictional arrangements are unethical. We are just making the professional aware that it's a specific situation where you have to consider further factors. And if you're coming to the outcome, there is such a double dip situation, which is perfectly legal under using the existing frameworks. There is another thought process to be done, make the client aware of. And we just had a court ruling in Germany, just as an example, where nowadays a court is saying, the highest court, it is not possible to get, that's not acceptable, such terms. I'm not saying that it's illegal, but it's not accepted. And this type of thinking, I think is necessary in a multi-jurisdictional, not to say you are not allowed, but be aware, you get here an advantage by this structure, it might be challenged. So if you want to go the safest way, that's one factor, be transparent, as an example. Or have you thought about current rulings or what is a practice? Just, it's a small stand back test, you can say, in this respect, because it's multi-jurisdictional, it's more sophisticated, there's a need for another thought. So that is, in essence, what we are giving to the professional accountant to consider.
Very good. Christelle?
What I was going to say, this is a perfect example of dealing with the issue of transparency.
Yeah.
And the code is calling out the PA to, in this particular case, address the issue of transparency, but from an ethical perspective, as opposed to from a broader sustainability perspective.
Thank you, Ken. Back to you.
You know, documentation. So I want to remind you that our ED is proposing an encouragement to document on a timely basis. And we have added there the purpose, identity, the nature, etc. All this is an encouragement. And the majority of views was very supportive, but also from different stakeholders, we have heard there should be a requirement and or a stronger encouragement. I put it like this. So I think we all agree. I think it is useful to have proper documentation. It's more a risk management issue. And some jurisdictions have established requirements, and that's fine. We have listened to the comments and we see that it is an important issue, but we see also that it is somehow a wider issue, because the only part where we have a requirement for documentation is in 400. So in the audit and related sector. So the question is, and that is, we think as a task force, beyond our scope, to widen this principle also to part 1, 2, 3. That's why it's, in our view, a broader issue, and we are consistent with the extant framework and framing of documentation, but we are open for the discussion here. So our proposal is not to change it, being consistent. Also, for example, no CLA is always an issue. There we have also not a requirement, but this encouragement. And by that, we think it would be a little bit surprising to do it here and not consider at the same time in other parts of the code. And perhaps it's less an ethical issue than a risk management issue. So that's a little bit our thought process we had, but open for discussion. But before coming to the discussion, we just have also added a bullet point on the stand back test, that this is also might be a factor or a part of the documentation which we are encouraging. So this is our proposal, and I'm now listening to your views.
Thank you very much, Jens. Sunam, if you allow me just one question before the comments. Can you tell me these suggestions to be bolder and be to have a stronger encouragement or even a requirement? Where did they come from? I don't want to know the names, but which kind of stakeholders were required?
Also from some parts of the profession, regulators, but also from some professional organizations. And you see
that's
those.
That's very interesting.
Yeah, it's not
very interesting.
It's not only the regulator.
Okay. Just helps my thought process.
Yeah.
Sunam.
So this issue, I 100% agree with your point, simply because I believe if we discuss this issue, it applies not only here, but also the topics we discussed yesterday. For instance, external expert. It should be divided by audit, review, sustainability assurance, or other assurance. So, and also this issue affects the whole entire code. So we need to be treated. We need to treat it as a separate project in a holistic way. That's my point. Thank you.
It's done.
Sadia, I waited for your comment.
So I spoke about this pre-ED, and I understood why we hadn't gone that way. I did also read all the comments of people actually resisting the encouraged of documentation. So I think in a balanced approach, we have reached the right decision. But I do wonder, there was a comment yesterday on experts on whether documentation should be required. I was wondering if we could consider documentation as an issue for post-implementation review. So if the task group could make that as a recommendation for PIR structure. And we say that it's a regulatory issue. I think it's an implementation issue. How is part 3 of the code being implemented? And are we all keeping the same amount of respect for what are we supposed to do in those sections that are unregulated? Thanks.
Thank you for the suggestion, Sadia. Christelle.
maybe in doing these PIR review, there might be interest in having a look at which regulations are transforming our recommendation into requirements, if any.
Okay, thank you, Christelle. Chana?
I think this is, you have to keep in mind, this is a global code and there are countries at different levels of development. It doesn't stop a national standard setter going further and making the guidance mandatory, similar to what in Australia we have a tax standard and it makes documentation mandatory. So, you know, it's not stopping jurisdictions going further.
Thank you. Christelle?
Just maybe if we feel there is a need for that, we could have a holistic review of the recommendation and which one could be well and for which reason transformed into requirement if the regulators wanted to, because maybe there are circumstances where we recommend documentation and there is no need or value or more burden and related consequences to a transformation to a requirement. And so to help eventually those regulators who would want to focus on some transformation. But I agree that as it is a global and framework neutral code, the recommendation is for the moment the best situation we can do in a lot of circumstances.
Thank you, Christelle. I must say, if I may, just a comment on my side, that first, I'm fully comfortable with this approach. And secondly, that your response to my question, it was just a confirmation, just helps confirming that, well, I'm comfortable because of all the reasons that were shared here, but also because personally, this is a personal perspective. I'm not sure that having a mandatory requirement for documentation always helps and necessarily helps addressing the issue in a best way. And it's clearly, as you say, for me, a matter of risk management for the providers and for the regulators as well. Sorry, because it's very, I mean, it's easier, but it does not even ensure full address, the issue is full address. So I think it's the right way to go for all the reasons. Next section.
Okay. It's the last section I want to highlight, but we have also time to look at other issues. It's about tax planning products arrangements developed by a third party. So this is the situation where, or this covers different situations, and either where there is a pre-packed third-party product, or where you are addressed and you are not the expert in this and referring to another one, another practitioner. So all these situations where tax planning is in the room, but in a different perspective, the PA is involved. So we had received on our proposed draft several comments broadly supported that we have to cover this situation, including the transparency on fees, on contingent fees or referral fees, whatever kind of fees. But then we got some input that there are two scenarios which we should perhaps treat in a different manner. Scenario one is where the PA refers a client to a third-party provider, just saying, I'm not the expert, but this firm or this PA has some competencies. And the other situation is where the client approaches a PA for advice on a tax planning product or arrangement developed by a third party or the client itself. So different involvement of the PA. One just to refer to someone, and the other situation, you get something and you should do something with this product. So this concept we want to implement in this section. That's why it looks as if we would have changed a lot. No, we want to make a difference between the two situations. That's why we restructured a little bit the flow of that section. So you see there that we have here, I mentioned scenario 1 and 2. So starting with scenario 2 is the first requirement, where you see if a client approaches a professional accountant for recommendation or advice on a tax planning product or arrangement developed by a third party, the accountant shall, the first is inform the client of any professional or business relationship the professional accountant has with a third party provider, be transparent, again, from an ethical standpoint, and then apply the provision in this section with respect to the tax planning product arrangement. So credible basis, etc., etc. So in this case, there's a product which you should give an opinion on, further develop, etc. So that's this scenario, but we have changed or clarified the second scenario. If a professional accountant is only approached because giving advice for an expert, so to say, or you are considering, oh, it's a multi-jurisdictional issue, not for me, but I know this firm is expert in something, there the accountant shall inform the client of any professional business relationship to the third party, because that should be transparent whether this advice is not driven by any relationships which might influence that. But everything else, you are not responsible for the third party advice. That we want to clarify, because that was not as clear as it should be in the previous flow of the text. So that's why we added also application material where the professional accountant only recommends or refers a client to a third party provider or tax planning services for provision of this section do not apply. However, the provision in section 330 are relevant if the accountant receives a referral fee or commission from the third party provider, to clarify this. So, and the conceptual framework and fundamental principle is applicable also here, but it's not this section. So you are not responsible if you're not involved for the third party advice following after you refer. So that was the objective of reorganizing this section. I think no material change, but clarifying these two scenarios. We'll stop here for listening to your advice.
Comments, advice. Andy?
Tom.
Oh, sorry, Tom.
Does it mean that's the 3524A1, even if get the accountant receives a referral fee or significant commission fee, they are separated from the from this 380 provision?
Yes, but it must be made transparent. And if a referral fee is legal under a certain jurisdiction, that's why we're making the cross-reference through 330, because in many jurisdictions, such fees are not allowed. But that is something, first of all, transparency, and then it's up to the jurisdiction then. But it's then not an issue of 380, it's an issue of 330.
This might be a kind of ticky-tacky technicality, but if I'm looking at what's in 23, 24, 24A1. Are we saying you can override the requirement to maintain confidentiality? Because you're required to disclose the accountant shall inform any professional or business relationship the accountant has with the third-party provider. The phrasing like that is used in a couple places. And I'm fine if we say yes, but we probably ought to say that in here.
We will consider this. As we had now 90. So, yeah, sure.
I would like to, on the record, also mention we received feedback in the last few days from a respondent who wanted to clarify particular scenario circumstances. Say if the PA was to recommend the client to a third-party provider, and a third-party provider is providing aggressive tax planning, should the PA go ahead and do the recommendation? So it's something that we were asked and tasked to think about if that scenario was to come up, and would like to go on the record that it's for the task force consideration. But it is, this project isn't about addressing aggressive tax planning, though we recognize that what would the PA do if they know the client was pursuing a particular strategy that they themselves wouldn't want it to undertake.
Yeah, so it's not a forum shopping which we want to support here, but that's why I've said that the conceptual framework and the fundamental principles apply. So if you know that referring to this party over there, you just don't want to listen to see, and that's not what we're saying. But it's not my responsibility if I'm giving a client 3 recognized names of professionals to say, go to this or that firm. I'm not responsible to reassure that the outcome of the advice has a credible basis, because it's then up to those professionals, whoever the client has chosen, to make the proper thought process on their own recommendation. So even that, yes, even that, because that is a question whether a referral fee, for example, in my jurisdiction, referral fee is not allowed for any accountant. So no, that's a question. No, but that is a question of the framework, and that's why we are referring to 330, where the whole issue of referring fee is dealt with. That's then not a 380 issue, it's a 330 issue. That is our thought process, because this question of referral fee is relevant in many situations, not only tax planning, also in other advisory services. So that's then the pinpoint where we have to make the assessment. So that was our thought process. But we can consider the situation if there is some misleading possibility, but I think that would be covered by the conceptual framework and the fundamental principles.
Sorry, I'm a little bit new to this field, but the third party means that even if it's a third party, there might be some possibility of the business relationship with that third party and the PAs. Because if it's in that, there are 2 situations. The first situation, then you have to inform the client of the relationship of the between PA and the third party. So it shows that there might be some possibility of the business relationship, even if it's a third party, but the PA and third party have a business relationship.
Mm-hmm.
And it might limited to the referral fee. But in the second case, and in the second, if it's just given a reference, so just like you show that just keeping their keeping the face off, and even if you haven't, so the reason to believe, perhaps to know or reason to believe that's the party isn't giving the structure, that may not have a credible basis. It's okay. I think that shouldn't be there.
Yeah.
message you would like to
Yeah.
convey.
No.
Yeah, or said another way, I agree, Tom. I think the task force, as you said, will take this away to think about, does something get added to the code or not? But I do think I'm always very aware with third parties of the adage, never use, or in this case, refer to a third party to do something you would be unwilling to do yourself for ethical reasons, because that's a bit of the wink, wink. Yeah. And I think that's what you're getting at,
Yeah.
Tom. Yeah. And certainly we don't want to be in that position.
No.
So I
Okay.
think the task force will,
We have to consider whether it's covered by the extant code, yes or no, this situation. And if not, we have to think about how, if and how to address.
Only a question, just to be sure. So we are saying that if the PA is just referring with or without any referral fee, just referring, then step away.
Yeah.
This section is not applicable at all to this PA. Okay.
Thank you. Ken?
Certainly the task force will take that requirement task force has received for further reflection and consideration as to whether the board should consider putting any response in this particular section. But I suppose my point is that this is potentially a broader issue than just tax planning, because the PA may in fact be referring a client to any third-party provider, not just in relation to tax planning.
yes.
So if we're going to deal with the issue, it is a broader issue, and there might be more to it than meets the eye, because if the thought is that there ought to be some consideration of the third party's ethical practices or practices, whether the third party is a reputable third party provider or not. That then entails consideration of some background understanding of their business, their practices, etc. So I think it's potentially slippery slope to where this might go, and as I say, it's potentially broader than just tax planning.
Okay. Yes, I think we have now considered every item we want to highlight, and I think that's 90% of the text we have presented to you. And I would like to ask you whether there are other parts in 280 or 380 where you have questions or remarks, or I think Sadia, you want to?
I was wondering if we've given any reflection on how tax planning is coordinating with workstream 2. Because if we are issuing tax planning in December and workstream 2 is going to go out with an ED, then we're going to need to make conforming amendments.
We're still release this in the in the post-launch session.
Okay. Sorry, the other suggestion was consequential amendments. At the moment, tax planning only looked at 321, which is second opinions, but there might be opportunities as you discuss NOCLA to make a clarification on the tax evasion there. And the last one was on fees. We referenced 330, whether you want to reference 330 back to the section.
Thank you.
Thank you, Sadia. Luigi?
Yeah, with reference to 380.8A1, ballot, ballot, where it is a management responsibility submitting the client tax return, so on. I wonder whether it is the submitting tax return or the responsibility to comply with the law, including ensuring timely and complete fulfillment of these. So because elsewhere submitting seems to be more a compliance activity.
Okay.
Thank you.
So if there
So-
are no other comments,
Uh,
Let me see.
Yeah,
Sorry.
Enough time. No, we have,
Yeah.
you have enough
I would
time.
also take this time to. Sorry?
I'm asking whether there are, so we can make turning pages, but I think we had
Yeah, we did it.
most of them.
We did it.
So perhaps we give you 5 minutes to consider if there's anything left, and if so,
Yeah, Luigi, please.
Sorry, I have minor comments, but I wanted to.
yeah, sure.
In 380.11A2,
Yeah.
I found very useful the example you included into the explanatory memorandum around this alternative.
Okay.
Line. So I wonder whether there is a way to have them included into the code, be the best option, or reiterated in the basis for conclusion. But they were really useful.
Okay.
Thank you. Tom, please.
Thank you very much. I just like to add a little bit of the on the basis for conclusion or perhaps a public statement, because I think that this issue is really a little bit of the one of the major issue of the burning platform. And then when we publish or finalize this, we need some sort of strong message. I mean, that's the this is the IESBA is tackling the real issue and the current issue as well. And we are changing the behavior of the PAs. So that's the message that we should like to convey when we finalize this. And just a little bit of the reiterates the previous comment is that we shouldn't give the safe harbor to a certain behavior. So that from that point, I'm a little bit I feel some discomfort on that
Referral.
issue. Yes,
Yeah, okay.
referral issue.
Thank you, Tom. Sunam, please.
Can you put up paragraph 8A1? It's I think it's page 8A1.
Yes.
It's not.
It's a responsibility of management.
Right.
Mhm.
It's the title is responsibility of management and those charged with governance. That's good. And the next paragraph is in relation to tax planning management with oversight of those charged with governance. So expression is a little bit different. The title means that both management and also TCWG have
Okay.
the equal, individually equal responsibility, but with oversight of those charged with governance means little bit different, right?
Okay.
We need to clarify.
Okay.
And on the paragraph, fourth bullet point.
Yes.
Yesterday we discussed external expert. So it said engaging external experts. So this phrase, here we talk about management. So it should be management expert or expert, something else.
Okay.
External expert is different and misleading.
Okay. We'll trust Laurie to that we are consistent in the finalization.
Thank you, Sunam. Luigi.
380, 60, 16, sorry, A2. The first is the last ballot. So difficulty in establishing an adequate factual basis and ultimate beneficiaries. I'm guessing what you are meaning. I wonder whether the basis for conclusion could elaborate a bit more in order to ensure consistency in the application.
Okay.
So
Just
Time.
Just more. Okay. Here's another one. Yep. Can I? 380, 18A3. The first ballot.
Yeah.
Referring the client to an external outside, to an expert outside the professional accountant. in order to cure self-interest of the view and so on. I wonder why, even in broader organization, we may have experts in many parts of the world and fields and so on. So why necessarily an external expert? It could also be an internal expert that has different reporting lines and so on and so forth.
We'll consider this. So these are examples, would be my first answer. So it's not exclusive. And that an external expert is the stronger and the wider, but you can consider this.
Tom, please.
Sorry, I'm taking the chance. I understand that my colleagues of the PIOB has been consistently referring not only to the documentation but also to the transparency, as the Rainier has raised. So, and as for the documentation, I understand the dynamics of this discussion within the board, and I think that's we would like to respect the discussion, and should be clearly explained in the basis for conclusion. And then as for the transparency issue, I think that's it's also better to be explained in the basis for conclusion, and at the same time a little bit more a positive way. I understand that Ken's point that this is not for the reporting standard, so it's not be dealt within the code itself, but we should be a little bit more positive in the basis for conclusion. It's a way in the future, and we are well aware of that. That's sort of the tone of the thinking. It might be very positive in the basis.
No, we had a lot of outreach activities also with GRI on that 207, and we discussed the system, the disclosure system, and the compliance. So we are aware of that system, and we are, may I say, as a task force, positive, but it's a reporting part, and we can explain this in the basis of conclusion. But I want to highlight that we had outreach also to the reporting side, to the disclosure reporting framework setter.
Tom, I was going to invite you to any possible final comments on these proposals, but I don't know if this what you meant to say. Jan, thank you very much. Jens, anything else?
Just the next steps.
Perhaps?
So we will have in October a task force meeting where we want to finalize the final proposal to you for December, where we also want to digest all the input you have given to us. Thank you very much. That was for us very, very insightful and helpful. And we are planning also to provide you with a nearly final text in advance of the board meeting, so that we strongly encourage you to to respond in advance, that we are able also to digest the first input from your side in advance as a task force or during the first days of the meeting, so that we, depending on all that, are able to make a final decision in December. So thank you very much.
Thank you very much, Jens, task force team, for allowing us to get where we are now, and thank you to the board members for the attention paid to these proposals and to the comments provided, helping enhancing the quality of these proposals. And thank you, Tom, for your comments as well, for your questions that sometimes are not only questions, are a little bit of a challenge, which is always welcome. And thank you for your last considerations and suggestions, namely with respect to what should go to the basis of conclusions in terms of making the IESBA be more positive, as you say. And I couldn't agree more with that. This is not only this is not only about setting the standards, it's about providing a message about what's here and what we want to do in the ethics space. Moreover, and I think that this is not a minor point, we have an ambition which is not written and will not be written anywhere, but it's true that, well, the OECD that made it something in this space, but this is really the first time that an international organization dares to go in this space and to take some action. And this can be a milestone, not only for the IESBA, and it will be, I hope, and I trust that it will be, depending on how much we can bring this forward, but it can be a milestone in terms of international standard setting and the international approach to tax planning. I'm not going to be more granular in what's in my mind, but in a nutshell, what I mean is that such a project can fill, at least mitigate or fill the gap that exists, and therefore allow for the creation of a global baseline and make other possible initiatives less urgent or less necessary. And this will have a lot of advantages, but the first one is that it's going to be us, the IESBA, setting the not only the tone, but the most basic and global principles in this space. Could we be more ambitious? We always can, but I think that we should not lose sight of the fact that this is the first time that an international standard setter, again, dares to go in this space. It was not easy. This is not the final step, but we are almost there. It was not easy. Some of us know better than the others how difficult it was at the start. What it took a lot of ambition, courage, I would say, as well, and being reasonable as well. And I think that's exactly, looking to the project as it is now, I think that's exactly where we are. It's a significant step forward where never ever the others dared to go. Could be a giant step, yes, it could be, but probably it would have consequences, and one of them would be that it could be more less acceptable, and the pushback could be so strong that it would not be as effective. So I think that we should be proud of this and the work done until now. It's not the last step. We have December, and with respect to this, and I don't have time now, but maybe this afternoon I'll come back to this topic, but we really have to be prepared for December. This is going to be an incredible meeting, but I'm speaking specifically about tax planning and not yet about the rest. This will be the last, I hope, we hope, we trust, the last chapter of this important project. We can't fail. We will have a lot of other extremely important things to do, but this will be the project that will be approved final, which means that, and it's not an easy area. I think that we are very good position to make it an easier chapter and step, but it will very much depend on many things: board commitment and commitment before the board to prepare for the meeting and to prepare for the approval, and making a significant and meaningful and thoughtful decision on this. It will mean that we will have to be focused on the changes that will be made from now until December, which I think will not be, from what we heard here today, will not be very significant. They will of course improve the quality of the project, but there is nothing dramatically different from what we have now here. Now, of course, this is a long. It's always a long way to come here with many steps that we are overcoming each time decisions are made, and that's how we should really be prepared for December. Be sharp, be focused on the different on the proposals that will be made and that are different from what we have here now. Of course, never ever we should be we should refrain or avoid flagging fatal flaws, major issues that may come to our mind, but it's going to be really the time to look at what what the task force will propose in terms of new well, amendments to the current version of the proposal, and prepared to make a decision about the So, well, that's it for now. And maybe this afternoon we'll have a few additional things to do. But to say, thank you very much to all those task force staff, directors, and of course the board involved in this project. Ken, do you want to suggest that we approve the minutes?
Yes. It is a very important task, and it is a very important task. And if I may just flag to the board that the minutes are a very important document. They basically summarize the essence of the board discussions for the entire week. And they are an important document of record that indeed we find time and again firms, national standard setters, users wanting to go back and understand the reasons why the board came to certain positions on certain issues. So these are important documents, and I'm very grateful to the board members who actually very diligently review the minutes. And case in point, for this set of minutes coming out of the June board discussion, we have made a number of changes. Most of them are editorial, and we picked up, I'm happy to share, we picked up 19 commas that we've added. So that's just to illustrate to you that we have people who really very, very closely review the minutes to the point of picking up all the commas and the articles and what have you. But that said, I welcome any further comments any board member might wish to raise in the minutes. So we take silence as the board approving the minutes as presented and as amended. Thank you.
Thank you very much. And don't misunderstand me, because it's not that I don't value, sorry? Oh, Yao Shu, sorry. Yao Shu?
Sorry, no special comments. I just agree the minutes.
Thank you.
Okay, thank you. Thank you very much. And thank you to all of those who provided comments to the staff for having accommodated those comments.
Yep.
So
may I suggest, Gabriela, we ask the board to reconvene at 1 p.m.
okay, here we are again. I apologize for the delay, but yeah, I had a meeting. So welcome back. This is the last, really the last part of our 5-day meeting. And we are going to listen to Mark and Workstream 2, Jeff and Laura, about on the turnaround of the documents, I think, after the considerations of the first 3 days of this week. Mark, the floor is yours.
Thank you, Gabriella. And I just want to sort of put this in the context of we have considered all of the feedback from the board, and this is presented to you more as sort of agenda of this is what we're going to be doing at our next task force meeting in October in London. So this is just really sort of as an indicative presentation.
The one thing I should say is our intention very much is to deal with these issues and the other feedback that we've been given by board members at that task force meeting. And then we want to get a version of the standards out to you after that. So at least we can do one turnaround before the board meeting itself. So then if there are any further areas of clarity or things that we need to address, then we can do that. So please just bear in mind that you'll all be getting a lovely chunky pack of reading sometime late in October, which I'm sure you're all looking forward to. So the five issues that are really sort of very much front of mind is that it was pointed out to us that the way in which we'd drafted the text relating to quality management is that it was implied that it was a requirement in the code rather than quality management is a requirement that's linked to ISSA 5000 and the IEESB's work. And we will obviously update to reflect that and to take account of what board members have said to us. The second area in terms of dealing with some of the issues of definitions, and just please accept these as indicative rather than absolute, because we'll continue to work on them. But our sort of direction of travel is very much to sort of, firstly, on the component definition, to make absolutely clear that entities within the value chain are not components, because where we were, there was a risk that it may have been slightly ambiguous, and therefore we'll clarify that. We also had an initial discussion about the value chain and how we might want to define that. And of course, one of the challenges in defining the value chain is that it very much depends on the reporting framework that you're using. So our sort of initial thought, and we'll discuss and develop this further, is that the concept has to be defined with reference to the applicable sustainability reporting framework, not IESBA saying this is our definition of value chain, because the ones that already exist from the ISSB and indeed from EFRAG in the ESRS are very, very comprehensive definitions. And so therefore we would want to be able to recognize that and continue to sort of deal with that. Obviously, we've got to clarify the relationships with entities within the value chain, and one of those things that obviously we need to take away in respect of where we get to with those entities is how we sort of better articulated how this knows or has reason to believe principle will work, and indeed what the independence requirements are. And one of the things that we were talking about, particularly with respect to the value chain and the knows or has reason to believe concept, is that there are two sort of schools of thought we can follow. First of those is how you work, for instance, with services providing to lending syndicates, where what your clients have in a syndicate varies enormously. And you wouldn't say there was an independence issue if they're a minor player moving in and out. But is there a trigger point at which the knows or has reason to believe sort of threshold kicks in, and then you'd expect a more substantive consideration? So we'll look to see the extent to which we can develop that. And the other thing, of course, that we want to look at as well is if there are independence issues that arise from that value chain issue, can we also consider how to assess threats to independence and safeguards that can apply? And those safeguards would, of course, follow the conceptual framework, and we'd use, or we will discuss how we might use an objective, reasonable, informed third party test to say, you know, is there any sort of residual threat to independence that has to be addressed? And hopefully that will allow us to come back with some more substantive proposals which will address the concerns that board members raised. In terms of the question on groups, we will continue to discuss how we work with that. Obviously, those who use our code will need to ensure that they can apply the sustainability provisions in the context of a group sustainability assurance engagement. One of the things that we are taking away to discuss is there is a challenge over first-time application, very much aligns with the discussion we had over ISQM1. Auditors had over 2 years as a sort of run-in period. So therefore, although we'll have an effective date for the standard, we need to think about what those transitional first-time adoption arrangements are, and indeed how much time practitioners will need to basically be able to use the standards in an effective way. And of course, we'll continue to look at the concept that we developed around Section 405, because the driver continues to be having an equivalent framework for, an equivalent standard to audit engagements. In terms of proportion of fees, we're going to clarify what we started to set out. I was looking back at the slides when we discussed them in June, and of course, the thing that perhaps is really important to make absolutely clear is that where the provider of the sustainability assurance engagement is also the auditor of the financial statements, then of course it's 4A that applies. The requirements in 5 only apply where you've got someone providing the sustainability assurance engagement who is not the auditor of the financial statements. And you know, one of the things that we recognize, and it links into the challenge of dealing with the group concept, is also this question of how it works in an integrated environment, and we believe we've got a way forward, and we can set that out, but we'll discuss that further in October before returning to the board. And then that moves on, of course, to what are the threats to independence, where a firm provides both the audit and the sustainability audit engagement, because you've actually got, in a sense, a different multiplier impact where you've got the audit and where you've not got the audit, and what that then does to the provision of NAS. And that very much comes through where you've got separate providers for the audit of the financial statements and the sustainability audit engagement. But we need to ensure that we've got a proper set of guardrails around that to address threats to independence that might arise from the provision of other services. We're also going to take a look at the existing guidance that's in Part 4A to see whether or not we can sharpen the guidance that's currently in there. I think one of the things that we take away very clearly from the board's sort of direction is the complexity of some of the sustainability relationships, particularly in a diverse group where you've got a broad value chain, is we don't want to create a situation where you've got effectively a mass resignation of everyone because no one is independent of anyone else. And we recognise that that poses a particular public interest challenge, and we'll look to see what we can do that, but it may as a result be some conforming amendments that we want to put through. And part of that consideration will of course look to see in the context of the work that's being delivered, what is a statutory requirement or what is mandated to be delivered, and what is a sort of what is an add-on, an optional or voluntary piece of work. I think the other thing, just to be clear on, and just to pick up on some of the discussions around the board table, where we've got suggestions for conforming amendments, we'll consolidate those into one document so board members can see the totality of any conforming amendments that are being proposed. And I think also one of the things that we'll highlight and make sure is absolutely clear is that the approach that we've taken and the approach that the board has endorsed on a couple of occasions now is an equivalent approach. And that equivalent approach does, of course, apply in the NAS space as well. And we recognise that particularly from the way in which the CSRD is framed in the European Union. And of course, we'll continue to watch this space, because by the time we get to our task force meeting, we may possibly have seen final SEC rules, because they possibly rumoured for October, but we'll see. So we've got a fairly busy couple of days planned, as you'll see, but hopefully those will address the concerns that were raised around the board table. Obviously, if anyone has further thoughts or further ideas, and indeed, if anyone has further solutions, then, then please do drop myself or Sylvia or Keith or all of us an email, and we will, of course, feed that into the task force's consideration in October. So this was very much intended not as a sort of this is what we're doing in response to your feedback. This is indicative and it needs to be talked through in the task force, but that gives us a good agenda of things that we're going to deal with. And as I say, I just want you to be aware that we'll be expecting to give you a revised draft to turn round. So at least we have 2 iterations that we can deal with and then go into the board meeting in December. So that's really all I wanted to say at this stage, Gabriella, other than you'll see the next steps, task force meeting. We'll continue, obviously, to talk to the reference group and continue with our outreach and our engagement. And obviously, we'll consult with the board where we have got issues that really need a sort of bit of a longer lead time for thinking and everything else. But that's where we will go, other than to the airport.
Thank you very much, Mark. Thank you very much to the task force for coming back with these indicative directions after the comments collected 2 days ago or 3 days ago. I understand that you're not necessarily seeking for comments at this stage, but let me just see if there is any fatal comment or any critical direction that the committee, the board would like to convey at this stage. And I see Tom and Ken. Tom, please.
Thank you very much. I would like to be very brief. On the page 9, you are talking about currently their all services are NAS, and they start to the assurance service. It's so that at least the first few years, the proportion is very, what can I say, this not very balanced. That's sort of the non-PA issue has to be addressed. That's the first point. And the second point is that sort of the, I'm not quite sure about it's a problem of the workstream 1 or workstream 2. But then if I come back to the scope issue, I perhaps remember that there might be a scope issue surrounding the workstream 1 and workstream 2. And I don't say that the workstream 1 should deal with the part 4B type, but the other entire coherent explanation of what the part 5 as a whole is uncovering or try to cover have to be a little bit more consistent. That's sort of coordination of the explanation between the part 5 workstream 1 and workstream 2 is one of the important points to remember.
And the good thing on that is that the model that we've used so far and that we'll be using in October is that both work streams will be together. So we have an opportunity to have some shared sessions where we work through these areas of overlap so we can make sure that what we've got is a coherent package as a whole for the board to look at and not 2 halves of the pantomime horse that don't quite fit together.
Thank you, Tom and Mark. And I believe that together with the matter of consistency, it's also a matter of clarity and communication, because clearly from the questions that we have been receiving here and there is still I think some work to be done to make clear that everybody understands what part 5 covers on one side and the other. So it's making it as simple and clear as possible. Ken, please.
This is not a question, but for the benefit of all of us, I think at which point of in time in the future, up until December, do you think we can share the combined documents? 1, 2, 3, 4, 5 all together. I believe it will be the earlier the better, but there are second read will be in December, so I believe it should be sometime sooner, right?
Might have to get back to you on that one, but obviously we're working as fast as we can. We recognize that it is important that we give the board that full set with the correct numbering. So it will obviously be after our October meeting, probably looking at maybe sort of, mid to late November at this stage, but we'll have a better idea once the staff gets a chance to look at the revisions or proposed revisions.
Depends on the level of surgery we have to give the patient.
Okay, thank you. Luigi, please.
I don't know whether this is due process or not, but I wonder whether it is possible to plan some informative session for the board well before the meeting in order to, because what I experienced with the first advance sending of August was sometime I had to read the paper 3 to 4 times in order to understand the full picture. Well, if someone had explained to me, probably it would be easier. I don't know, maybe. So I wonder whether it is something you may consider.
It is, Luigi, and one of the things that we were talking about is the sessions that Caroline ran for ETGA that worked very, very well, and that gave a good opportunity to address some of these issues. All I would say is if you only had to read it 4 times, you read it fewer times than I had to before I understood it. So, but no, I think it would be good if we could do maybe 1 or 2 sessions to try and allow board members an opportunity to at least talk through the structure and the content and make sure that when they go away and read it, they do with a good understanding of what the concept is and how it fits together.
If I could just add, if we are doing that, it's important that we understand the purpose of these sessions. It's more information giving, not discussing issues, because these are not public sessions. So we just be clear with that. Yeah. No, I understand that. So I'm just explaining. Absolutely. I think you do that. That's a good idea. Thank you.
Thank you very much for channeling this idea that has been floating around a little bit, and I'll speak about that after. But for the time being, it's no. It's a very good suggestion. You don't have to apologize. I'm just saying that I will come back to that topic a little bit later. Ken, please.
Yes, thank you, Gabriela. 2 quick comments, really on the slides and on this one in particular. We might just have been a little bit cryptic in terms of how we're explaining some of the rationale for how the task force or work stream is responding to some of the comments that were raised early in the week. And maybe this is more maybe for staff to take offline. If I were to look at the last bullet point, and I know Mark went through quite efficiently, but in case people were not fully understanding what this bullet point is saying, it is saying it is only an issue if the audit and simulations engagement are separate engagements. But I would argue that it would be a lot clearer if we also say what this isn't. In other words, that we're not addressing a circumstance where it is an integrated engagement. So I think that contrast is, to my mind, is important, so that people understand what exactly we're talking about. So as I said, this is more a matter for staff to articulate more fully, if I can put it that way. And the next slide, Sylvia, if you will. I just be a bit cautious with the bullet point that's been bolded there, because if it is the application of the conceptual framework, there's no specific requirement, but if you were to apply the conceptual framework, you potentially could end up with effectively a requirement to the simulations engagement. So let's be careful as to how we convey the point, and make sure that people are not reading it literally to mean the code doesn't require you to end the particular engagement. So so it's just how we how we kind of set out the rationale so there's no misunderstanding.
We have to be careful with that one. I agree, Ken. The thing at the back of my mind is that when the EU issued the audit directive and regulation, and the regulation in particular in 2016, when that came into force in 2016, they effectively had a whole class of prohibited non-audit services. And if you read the law very strictly, you'd say any provision of any level of prohibited service by you or your network firm anywhere would lead to an automatic resignation of the auditor. And of course, then everyone got quite nervous because you could see, you know, an auditor having to resign because of some trivial reason that didn't impact on their independence and didn't undermine their independence in any way. And there was a lot of thought into how to go around that. So we've got a model that we think we can use, but it's whether or not we can translate that model into the conceptual framework and the way in which the code itself works.
Okay, thank you very much to all of you. If there are no other comments or questions, I think that the task force is what it needs to the next level. Mark.
Absolutely. We've got a lot of really good feedback, and we're going to have a couple of very busy days in order to try and move things forward for a good discussion with you all in December.
Not to try, to move.
You have to show that there's a process behind this.
So, thank you very much.
I can't admit to having written it 2 years ago and just sort of pull it all sort of out of the woodwork at some point. But no, it's been a really helpful discussion, and also we're really grateful to board members for all of the written comments as well. We recognise that there's an enormous amount of text here, and you know, the fact that we were able to get so much valuable input and reflect on those in advance was hugely helpful.
For the contributions, and we can now move to workstream 2 presentation. Jeff, Laura.
Thank you, Gabriella. And we just have a few slides to work through with you, or just give you a quick report back. But before I do that, just again want to thank the board for some very robust discussions and some excellent suggestions. We've particularly on, you know, some of the strategic direction that we're seeking from the board, so that was very helpful. And of course, some of the refinement suggestions to say, you know, the different types of examples that we've included in our proposed tax on, say, greenwashing, forward-looking information and value chain. So, you know, things like undue reliance, some of those other examples are very helpful. And the work stream had a chance, of course, during the week to had a, you know, just some quick look at it, some quick reflections. But like work stream 1, we'll take those on board, and we will discuss those in September. There are a couple of things that we want to perhaps just let you know what we will be discussing in October as well. And the work stream has volunteered Laura to walk through those with you. Essentially, it's on the perhaps I'll just give you what they are. Just first one is on the proposed definition of professional activity. So we just want to give you a sense of where the workstream 2 is heading in light of the comments that we received over the week. The other one is, as Sadia has raised, is in terms of the treatment of the draft tax planning provisions, how workstream 2 intends to address those from a sustainability reporting perspective. So thanks, Laura.
Thank you, Jeff. So if I can start with the proposed definition of professional activity, and I'll just show what workstream 2 proposed in during this week. We heard from some board members a suggestion to have on this definition the reference to professional accountants, and instead of having a sustainability assurance practitioner, having a more generic term such as sustainability practitioner, in order to include both the assurance and the reporting aspects. And workstream to consider this suggestion, we encountered some difficulties connected with it, because first our preliminary views about this is that we need some consistency between the terms that we use in the standards and the addressees of the standards themselves and what we mention in the definitions. And so if we have parts 1 to 4A of the code that apply to professional accountants and all the provisions you mentioned professional accountants, and we get to part 5, and all the provisions apply to sustainability assurance practitioners, then we need to be consistent in terms of the paragraphs that we have in the code and then what we mention in the definitions. And secondly, as another board member also mentioned during that discussion, we believe there is a risk of having a generic and undefined term in this definition. This may raise interpretation issues and challenges in terms of the adoption and enforcement of the standards. And so Workstream's view at this moment is to retain the draft for now that we presented on Wednesday, and for IESBA to think about widening this definition when we get to a future project that will widen the scope of the reporting standards to also include other preparers apart from the professional accountants. And so going to the second topic on the link with the tax project. As you may recall, the scope of the ethics standards under Part 5 applies or covers sustainability assurance engagements, as well as other services provided to the same client. And so under these other services, it could be also tax planning services. And so Workstream 2 believes it is possible for the sustainability assurance practitioner to provide both sustainability assurance engagement and a tax planning service. When the practitioner is providing sustainability assurance engagements that are subject to the independence provisions in Part 5, which is the equivalent to Part 4A, and then we will have an equivalent section 604, then the provision of tax services, it's true that it's very limited, but it's conceptually and theoretically possible. And when the practitioner is providing another type of sustainability assurance engagement that is subject to the independence provisions that we have in Part 4B, then the provision of tax services is also possible under Section 950 that sets out a general regime for non-assurance services. And so Workstream 2's views right now is to consider including an equivalent Section 380 in Part 5. And this is because this is under the same premise that we also discussed this week regarding the Section 350 on the custody of assets, if you recall that discussion. Not including an equivalent 380 when that service is conceptually possible under Part 5. If we don't include that section, it may raise some doubts or incorrect views on the reason for not including that section. Is it because the service is not permitted, or is it because it's permitted but no rules apply? So I think the suggestion here is we'd prefer to avoid those type of questions. And including an equivalent Section 380 in Part 5 could also help with I think the objective that we've been listening here around the board this week, to expand a little bit the scope of this code. And so this would help level the playing field between professional accountants and those who are not professional accountants, at least when those that are not professional accountants provide sustainability assurance. And of course, Workstream 2 still needs to make a closer analysis regarding the potential adaptations that are required for including 380 in Part 5. But so far, no significant changes are anticipated. And as Sadia raised earlier, we also need to assess how to make it work in terms of timing considering that the board in December will be approving both the final text of the tax standards and the ED for the sustainability project. But that is something that we will coordinate internally. And that's it. Thank you.
Dr. just said, in terms of the tax project, of course, we will work very closely with Jans and the task force and staff to make sure it's, as seamless as possible. So it's easy for board members and our stakeholders to understand where we're heading, in those two different work streams and how they work together. But otherwise, Gabriella, and Ken, back to you.
Thank you very much, Jeff and Laura, and task force in general for providing us with these additional thoughts from the task force after the discussions that we had. Of course, I will listen to the board members and see if there is any concern that these positions and proposals raise, or any suggestion. Well done. I think that, yeah, it means that the job done was a good one. Seems that there are no comments, so the task force is also, or the work stream is also provided with the necessary guidance by silence from the board to move forward with these proposals as they are. Ken, any additional note on this?
Yeah, maybe just two final comments, at least from my perspective. As I was reflecting on your explanation as to the linkage we're making to the tax planning project, I'd probably articulate the rationale along the lines of the principle that workstream 2 has identified, and not so much explain it on the basis that stakeholders might have questions as to why a particular section is or isn't in part 5, if you see what I mean. So, and the principle essentially that if the associations practitioner is providing a service under part 5, all the applicable ethics provisions ought to apply also to other services that they provide to the same client. And that is basically the rationale. It's not so much as to whether there might be questions why a section is included or not. And maybe my second point is perhaps a more practical issue, and that is that, as we know, IESBA will be closing off its exposure draft early December. December 1st is my understanding of the deadline on their side. And as they work through their comment letters, and as they start to receive comment letters, let us work very closely with them and bring to our board in December as many of these early issues that they might be receiving in their exposure draft in order to inform this board's discussion in December, especially in relation to developing issues, whether it's issues of definition, issues of value chain, other practitioners, whatever this might be. So as much as possible, let's keep track of where they're going in terms of their process. Anything that's relevant, let's bring that back to our board in December.
Yeah, thanks, Ken. That's good feedback. We'll take those in.
Okay, Ken, thank you very much. And it's almost time to go, and I know that everybody's anxious to go, but allow me just for 3 minutes for some final considerations before you go. I hope that I could do it earlier so that everybody could be around the table, but it's nothing that special. First thing, of course, and probably the most important one, I'd like to congratulate the board and the staff and thank very sincerely for the incredible work done over these last months. I'm not speaking about what's behind, but it has been really a stretch for the staff, for the task forces and working groups, and for the board as well, because we saw from what we were asked to provide during the summer that at least for some of you, it was not a walk in the park. So this is really something that I'd like to highlight, and very specially, and the others will forgive me, a very special thank you and respect to the staff, which has been incredibly responsive, professional, and sometimes sacrificed even in their personal lives to be able to provide all this. So this has to be I think that this board has, I mean, I know that you are all aware of this, but this has to be said. And something that is related with this is that the board also has to understand, and I'm sure you do, that not everything can be done. And there are some urgent topics, urgent issues floating around and etc. But it's impossible to ask people more than they can. I mean, I think that we are beyond what is should be the limit. But anyway, there is a limit for everything, and we made options. And the option was that in December we are going to have the approval of the tax planning project, the approval of the strategy and work plan, and the approval of the exposure draft on sustainability, workstream 1, workstream 2, and the use of experts. If you think about the number of people at the staff level working on this seems impossible, but it's a reality. They did it with, of course, the incredible support or guidance of the task forces at the board, but this has to be acknowledged, and this has to be present in the mind of everybody when we ask for more. Or more urgency, or these kind of things. So this is my first word, and probably the most important one. Thank you, and we hope that soon we will be able to reinforce the staff and make their lives a little bit easy. There is a plan in that respect. We know that these things take time. It takes time to onboard people. It takes time to recruit people. But anyway, we as an organization are heading to a different level where we hope that in the future these things will be less demanding for everybody. This brings me to the preparation for the next board meeting and some wrap up of this board meeting. And starting with this, we went through. I'm not going to list the topics that we addressed over these days. Everybody knows them. Sustainability, tax planning, strategy or work plan, use of experts, etc. We went through an incredible number of topics in depth with documents which are already very robust. And I said that at the start of this meeting. This meeting was going to be and was critical for us to achieve success in December. I think that in terms of results and outputs, this was a very successful meeting. I think that we are where we wanted to be. I don't see any major issues or reasons for concern that may make us not believe that we will be in a position to take the decisions and deliberations that we need in December. But yeah, so in terms of results, I think that we are where we should be. It was very successful. We will have to be more effective in terms of process. And what I mean is that from a substantial perspective, but also very pragmatically thinking about what we have to achieve in December, we will have to be incredibly more nimble, agile, effective, to the point, making progress, etc. Otherwise, we will not be able to do what we have to do. This takes a lot of things. Well, I'm not going to say what it takes for the staff. I think that everybody knows it. For the board, it takes a lot of commitment. And commitment not only those involved in the task forces, and we know that from here to December, you have to meet in person, travel, work, etc. So it's a lot of things. But general commitment to be part of this, really make part of the decision that we are going to make, the decision that we are going to make in December. And this means understanding the projects, reading the material, coming to the board with a clear idea of what might be something that we could want still to improve. This takes a lot of work. We heard the very good suggestion of Luigi, and I don't know if there were others, in terms of pre-meetings with the board to prepare the board for the decisions. I think, well, it's a wonderful idea. Everybody mentioned what happened with the ETGA, where the preparatory meetings with that Caroline provided were immensely helpful, because allowed everybody to come to the board with a clear idea about what were the issues that we still had to address. No questions, no clarifications, etc. So this is extremely helpful, but again, I think that everybody knows what it will involve for the staff and for the board, the task force chairs and the task forces. I think that we will do our best to provide and to organize these sessions, but it also takes commitment from the board. It's not just, we have to agree on a date, and we know that dates with people, with your lives, is a nightmare, but also we are pre-assuming that this is going to be useful, and to be useful, the board members will have to be prepared for these meetings. Otherwise, they will be just an additional burden for the staff and the task forces without any results. If this is the will of this board, I think that we can't promise today, but I think we will do what is possible to organize one or two sessions where these doubts can be solved and etc. Like Jeb said, these are not going to be sessions to discuss, because it's not supposed, but to clarify a few things that may not be clear, and to allow the board members to understand which are the topics that we should be discussing on the 4th of December somewhere, not here in the offices. So I think that this has to be very clear to everybody. We have to be more effective in the process during the meeting. Also, because this board is supposed to be in this transition that we are going through, is supposed to become more strategical, less technical. This doesn't mean that the people around the table do not have to know and understand the technicalities, but it means that this work has to be a little bit. This work has to be done. We are very diverse around the table. We have people, fortunately, from many backgrounds. I'm probably the most different one, so I don't have a problem with that. On the contrary, but we have, like someone said today, we are different, but we have one mission and one purpose, and we have to be all prepared by having the same baseline of knowledge, which is, of course, some of the board members with a lot of experience and knowledge, others with a different experience, but there are the basics that we have to ensure. So there is some work to be done between here and December. I think that this meeting was a little bit the test for what we can achieve in December or not, and what is needed for us to achieve what we have to achieve without spending 24 hours a day in the room, which can be the consequence of not being able to progress and to do what we have to do. So sorry for these messages, but I was observing the dynamic here during these 5 days, and trying to put myself in my own shoes and your shoes in 3 months, when we are having to have an agenda which is much more demanding than this one, and we have the same time, unless we want to start at 6 in the morning and finish at 8. So sorry for this. This does not mean anything. And as I started by saying, I think that we were absolutely successful with this meeting. There are no reasons whatsoever not to think that we will do what we have to do. Just alerting that this will anyway not be a walk in the park, and that we will have some challenges to overcome in December, to be celebrating by Christmas.
Are you taking away Christmas?
Sorry?
I'm teasing.
I could.
You could.
So final word also for the staff who allowed us to meet here, to IESBA, of course, who provided us with this fantastic alternative to our offices. I confess that this place is, for me, having this view, having people so close, and we all being able to see everybody per se is an advantage, a great advantage. But it was really wonderful to have had the possibility to meet here. So I also want to leave a great thank you to the IESBA and to the staff that made it possible, because I think that nobody, probably you are not that well aware, and you don't have to be, what it means to organize a meeting outside the office. It takes a lot of preparation, takes a lot of work, which is very different from being meeting at the office. So thank you to all, especially to Astrid and Diana, who helped us in essence. And I think that's all. Yeah, so Tom, please, please.
Thank you very much. And I was told to not to forget the, giving the concluding remarks. And then first, I would like to thank the board and for the privilege of observing the meeting. And I hope that my remarks and PIOB's remarks wouldn't make the staff too perfectionist, perhaps, and impede the board effort for establishing better working environment. And then I would like to congratulate the board for the very intense and productive week in which several important projects have been deeply discussed with a sharp focus on public interest perspective. And as for the sustainability related project, I think that most of the deep discussion have made, and I believe and hope that the board made a giant step. I believe the board made a giant step forward towards the approval of the EDs at December as planned. And I would like to remind you that regarding SWP, I think that I was reminded once again that the IESBA is at a very critical juncture. In the SWP session, there was a heated debate around the scope of the core and outreach to the non-PA communities. And at yesterday's joint session, various suggestions were exchanged on how the two boards could cooperate, coordinate, or even jointly conduct some project. Personally, I think that the expanding the scope of the board and focusing on the critical issues of PA is a delicate balancing act and need careful examination. But I respect the board's ambition and the commitment to the public interest. And last but least, I would like to pay my tribute to the board and the task force for the long-lasting efforts of completing the tax planning project. I'm confident that the goal is near and its finalization has a significant impact on the behavior of PAs and other stakeholders in the tax field. I would like to thank you again for the privilege of observing this important meeting. Thank you.
Thank you very much, Tom. You were very welcome to your first meeting with us.
Thank you.
It's not going to be the last, I'm sure. And it was a privilege to have your full attention during these 5 days, which was amazing. And I hope that you felt at home with the family, and we will take away the guidance and the insights that you conveyed on behalf of the PIOB, of course, as we always do. Thank you very much. And with this, I wish you all safe travels, those who are going to be traveling today or tomorrow, and hope to see you all safe and in good shape in December. Thank you very much, all of you.
Just a reminder not to hang around beyond 4 p.m.